SpaceX set for its first quarterly report after the close today. The company's stock sitting near its lowest point since the IPO in June. Join us now, Ron Epstein, BofA Securities Senior Aerospace Analyst. Anything in the numbers that matter, or is it going to be some of the recent developments and sort of the discussion around what's pretty good progress in your view on that July 24th launch? And we could talk. I don't know, we've talked financials and, it's like accounts receivable and interest income. This has to do with progress on a heat shield for reentry.
Yeah, so...
I mean, it's really cool to even talk about it. Is that the positive things that have happened recently?
Yeah, I mean, it's beyond, cool. I think what's the most important thing to keep an eye on is truly the progress that they're making in rocket science, what they're doing with Starship. Right, so the number one thing I'm going to be keeping an eye on is Starship reusability. Right, so they had that last launch, they had a public release, but they'll get some questions on it. What do they think went well? What do they think went better than they thought? What didn't go as well as they thought? And then upcoming, they have the 14th flight of Starship, and that's where they actually put it into orbit and they bring it back. So, what progress they're making there. I think another important thing is they launched 20 V3 Starlink satellites. How'd that go? How are they performing? Are they performing to what they thought they would? Because that V3 architecture is kind of a precursor for orbital compute, and that's the orbital data center. So I think another important question I'll have for them for sure is the progress they're making on orbital compute. There's been a lot of talk around the engineering, the cooling, the heating, all that kind of stuff. What progress are they making there? So I think if investors just focused on, like your point, if investors just focus on, their loss in the quarter was this, or their capex in the quarter was this, and not to use the same old cliche, but you'll really lose the universe for the stars because it's a much bigger story than that.
I just don't know how you value a stock on those type things. Of course, they valued it on the IPO, so there must be some way to do it. But so they launched the payload had 20 satellites. In it?
Yeah, 20 V3 satellites.
Did you see this? Like in it, it's like a Pez dispenser.
Yeah.
That's cool.
And each one comes out one at a time. And then there's already a lot of satellites out there, so it starts communicating immediately with the whole network.
It plugs right into the network. It's optical
through laser.
Network.
That's just it's mind-boggling. So are there numbers that could be
I think
less disappointing or good or whatever? Which ones? What are you watching for?
Yeah, I think a couple key things. One, it's their first call. How do they structure it? Who's going to be on it? Is Elon going to be on it? Is Glenn Shotwell, the COO of SpaceX, going to be on it? I imagine they both would.
But could it be like an AI company that the number's too big that they're spending and the free cash flow is?
I think another thing people
could be anything, man.
What are they spending? Right?
Joe,
they gave a guide when they did the deal.
This goes back to the deal. Wall Street jitters. They hate SpaceX. They hate Elon. That's the hardest part anymore about trading. It used to be real simple, but I just don't understand sometimes. They'll trash as much as they can and then buy the dip, which I think they have. But you got people like this that question everything. And SpaceX and Tesla's not something you want to question. But the story goes on. They can't help themselves.
It is.
Absolutely.
And the science involved in everything
science.
Else. I mean, we'll look forward to it every quarter. Do you think Musk would ever have, and one more thing, something like that Apple, that Steve Jobs used to do?
Potentially. I do think in 10 years, if you look back on SpaceX versus where it is today, the story will evolve. Because as they get more capability to put things in space, as they lower the launch cost, that just opens more doors on more opportunities. So I think people who are looking at today as just an an AI story, that's just, it's too myopic, right? So they want to drop the cost of launch. We've gone from 20,000 a kilogram to about 2,000 to about $50 to $100. That allows all kinds of infrastructure building space, things that people can't even imagine today, right? And they're enabled, right? So
we may hear about it. So there could be some like wow moments in any of these calls.
Absolutely.
Basis. Okay.
Absolutely.
All right. Well, now I'm excited. Anyway, as excited as I get about an earnings report coming after the close, I guess.
Yeah, I mean, like I've said before, I mean, I'm very excited to cover it, given my background in engineering and stuff. I mean, what they've done is just completely remarkable.
Great. Ron, thank you.
And my pleasure.
Okay.
Hey guys, it is just past 7 a.m. on the East Coast. I'm in Aspen, Colorado, where it is 5 a.m. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. As I mentioned, I'm in Colorado today at the annual Aspen Economic Strategy Group meeting. We've got a huge lineup, guys, of folks that we're going to be talking to here today and tomorrow, including the CEOs of Lazard, Peter Orszag, Snap. We've got Evan Spiegel, who's going to be with us in a little bit, and then former Treasury Secretary Tim Geithner and Hank Paulson. I was at dinner last night. Jay Powell is here. Jonathan Gray from Blackstone. John Waldron. We're going to see Janet Yellen, by the way, tomorrow on the podcast, and then also Neil Kashkari. Lots of you could describe it as nerd debates about what's happening. Inside the Fed, that's happening here. We're going to bring you
the woman
all of
that screwed the whole economy
at
up.
U.S. equity futures at this hour. We got some green on the screen. Dow up about 220 points. Nasdaq up about 130 points. You got crude prices right now. Let's flip the board around, show you where things stand there. That's influencing so much of this. Brent now above 80. We're at about 80.74. I'm sorry, WTI crude 80.74, and ICE Brent crude at 84.56. And then, of course, Treasuries, which, of course, are a huge part of the story here that we've been discussing. Right now, you're looking at the 10-year at 4.6. You got the 2-year at 4.2, Becky.
Is it cold, Andrew?
It's actually not cold, guys. What do we think it is here? About 50? No, 50s. We think we're in the 50s. We've done this before at this hour, and it has been freezing. So it's a lot better than it has been
The dry cold.
in the past. In fact, it was in the night. It was super hot here. Yet last night, people were sweating through their shirts at dinner. It was maybe like
You gotta
in the
bring
90s. What do you
layers for
think?
the mountains, right?
Mm-hmm.
Lots of layers.
It's great. Awesome.
All right, Andrew, we're going to continue with Andrew. He's got a lot of great guests that are coming from there, but we also have quarterly results that are just out from McDonald's. Brandon Gomez joins us right now with more on that. Brandon, good morning.
Hey there, good morning, Becky. Adjusted EPS beating $3.38 a share ahead of the $3.32 that was expected. Revenue coming in a bit light, however, $7.1 billion compared to the $7.13. Franchise restaurants actually missed estimates, while company-owned and operated restaurants beat marginally at $2.53 billion. A global same-store sales growth coming in at 1.3%. That's in line with expectations for both the U.S. and international markets. And while it is in line, it's the weakest performance on an absolute basis since Q1 of 2025. Now, there is some additional news, too, for the company. Effective immediately, longtime veteran Skye Anderson is being named president of U.S. operations. Now, she's been with the company for 26 years and succeeds Joe Erlinger, who has been in the role for over 6 years. He will stay on as an advisor through early 2027. You can see shares were up about 2% earlier this year. The company will be making that transition effective immediately. We'll expect to hear more on the earnings call as regards to the health of the consumer, spending, menu innovation, foot traffic. You can see, again, shares about 2% on these hotter than expected numbers.
Yeah, we'll take it. 2.1% on last check. Brandon, thank you very much.
Thank you.
A lot of other earnings that we're watching this morning, including Palantir, which has been surging in the pre-market after earnings and revenue beat estimates. Commercial revenue more than doubled from a year ago. And U.S. government revenue grew by 90% to more than $800 million. That stock right now is up by about 15.5%. And then you've got Caterpillar shares that are also sharply higher. That stock is up by more than 8%, about 8.25%. Earnings for the company came in at $8.17 a share. That easily topped estimates of $6.20 a share. Revenue also beat thanks to sustained demand for its power generation and construction equipment. Obviously, this is an AI data center story. Caterpillar is also raising its sales and revenue growth outlook to the mid to high teens. And Merck beating earnings on both the top and the bottom line. It also raised its revenue outlook, but it cut its profit guidance because of a charge tied to its acquisition of Terns Pharmaceuticals. That stock is up by about 1%.
And coming up, it's Treasury Secretary Day, I guess, on Squawk Box. Later this hour, we'll actually talk to the current Treasury Secretary, Scott Bessent, live from Washington. Then the next hour, Andrew's going to speak with former Treasury Secretaries Tim Geithner and Hank Paulson. Squawk Box will be right back.
All right, welcome back, everybody. You've been watching the markets. The Dow is indicated up another 300 points this morning. That comes after it closed at a record level yesterday. The Nasdaq is indicated up by about 125, and then the S&P is off slightly, just down by about 6 points this morning. Let's talk a little bit more about the markets with Emily Rowland. She is Manulife John Hancock Investments co-chief investment strategist. And Emily, you're saying that right now what you're seeing is kind of the bull market investor's dream scenario. You want to lay that out for why you think that this is something that you would continue to buy here?
Yeah, Becky, there's been a lot to like about this market. You're seeing just explosive earnings growth. Just looking this morning, we're about halfway through this quarter's earnings season, and we've got 47% earnings growth. Like I thought last quarter was good at 28%. The estimate for this quarter was 18%. And we're now looking at an 86% beat rate. What's more is that we're seeing this great rotation play out across markets. You're seeing almost the revenge of value investing. This is a pitch we've been waiting for a long time, with now value handily outperforming growth. Small and mid caps participating, international stocks doing well. In the meantime, you just aren't really seeing massive euphoria in the market. You know, you look at the forward PE ratio on the S&P 500, and it's less than 20 times right now. So valuations are coming down at the same time that stock prices are going up. So we're seeing a lot to like, diversification finally kicking in. The biggest challenge is that typically when things are this good, and the economy is holding in pretty well at the same time, is that inflation usually picks up. So I think the biggest risk to all of this great news is that the Fed potentially does need to come through with more hawkish behavior here, maybe raise rates 2 times this year, and that's really the only thing that we think could stop all of these great fundamental drivers for equities today.
Would that change your opinion on whether people should be buyers if the Fed were actually to raise rates?
Yeah, it would. It depends on how much. So right now the bond market is pricing at a 67% chance of a hike in September, and then really sort of oscillating between whether or not the Fed hikes in December. We think that the Fed, the economy and the markets could certainly handle 1. 2 is sort of where this issue comes in. And Becky, the reason for that is that there is this unbelievable need for liquidity right now. These hyperscalers, whether it's issuing debt, issuing equity, whatever it is to fuel these growth plans, at the same time that markets are contending with whether or not there should be a blank checkbook there. You've got the Fed, sort of colliding with this. The Fed has provided liquidity to this market, but if we're looking at something like 2 hikes, the cost of capital goes up and that starts to fade. So it really depends on how these 2 forces collide. But for now, this incredible earnings, we think, is enough to see equities sort of win that battle.
And how do you feel about the hyperscalers in general because of that risk, because of how they've changed, because of how they've become more interest rate sensitive?
Yeah, I mean, even if you sort of take out some of the challenges here in terms of equity investments in other firms and how accretive that's been to growth, we're still seeing earnings growth that's solidly in the 20+% range here. So, we're looking at this sort of some of these issues here around this need for liquidity, but so far it's been absorbed. And the fundamental case is there. What we've been looking at is other ways to think about investing in this, looking downstream at where those cash flows are going, who's been the receiver of that. And that's one reason that we've seen this rotation. We've been talking about areas like industrials. We've been talking about going into mid-cap stocks to get more exposure there, looking at other drivers of return, areas like infrastructure, looking at international value stocks as a way to see some diversification there. They've been on fire. So really every stock on the planet is doing well. And we think this is the great rotation that frankly is going to be one for the history books.
We were just watching Caterpillar shares this morning, and they're up pretty sharply. I think they were up about 7-8% the last time I just looked at it. And that came on earnings that were really strong. But if you were watching the stock over the last month, it was off about 14%. Because there were some concerns about whether that AI data center build and that boom was going to continue. How quickly can sentiment change on these things?
It can change, but the good thing is that, for example, in the month of July, we saw this big shift taking place. It was really for the first part of the year all about semis and hyperscalers, and there was this huge concern about market concentration. I was just on a few weeks ago talking about that challenge, and now we're seeing the benefits spread to other parts of the market, and we think that that's a really compelling story. It's something we've been talking about for quite some time, and it's satisfying to watch that rotation and that diversification benefit here play out. Industrials are also benefiting from other things. You've got the one big beautiful bill that's encouraging CapEx across the United States. You've got onshoring activity continue to bring supply chains to the United States. You've got more defense spending in play. So there's a number of stories here on top of the fact that the bar is much lower for earnings in industrials. And we like that as we move forward here. We want to find sectors that have a lower bar that can easily be overcome.
Okay, Emily, thank you very much.
Thank you.
Andrew, we'll send it back over to you.
Coming up in just a moment, the director of the Aspen Economic Strategy Group, Melissa Kearney, is going to be with us. We're going to talk about so many things, AI, jobs, and everything else. And then Treasury Secretary Scott Bessent's going to be with us live from Washington this morning. Squawk Box coming right back after this. Welcome back to Squawk Box this morning. We are live this morning in Aspen at the Aspen Economic Strategy Group's annual meeting. Joining us right now is the group's director. She helped create this thing, Melissa Kearney. She's also a professor of economics at the University of Notre Dame. Good morning to you.
Good morning.
It's a hell of a lineup of people who are here. I mean, just being at that dinner last night was pretty remarkable. So many people talking about regime change at the Fed, big issue, of course. A lot of people talking about what's happening in the Middle East, but you can't sort of go a minute without somebody talking about AI. And in particular jobs, it seemed to be the conversation was less, or at least so far, less about are we in a bubble per se, and more about, well, maybe this is going to work. And if it works, maybe we need to think about what this means to labor.
That's right. Thanks for bringing that up. I do think the conversation about AI can go in so many directions. And here with this group of business leaders and economists and a lot of former policymakers, we're really focused on thinking about how is this new AI-infused economy going to work in a broad-based way? And are there going to be jobs for many people? Is there going to be a productivity boom that boosts the prosperity across the board, not just delivers great returns to the sort of leading firms or the equity investors?
So, what are the answers to that? Everybody always says, oh, well, look, we might have a jobs problem in the future. And people say, we need to get prepared for that. We need to get ahead of that. And then I think to myself, what does that even mean? What would you do to get ahead of that?
It's a really hard question. It's also not an AI-specific question. So this question of what to do to make sure that more people can participate through this disruption in whatever the new economy looks like. It's not different from previous technological revolutions. It's not different to the trade shock and all of that. I think we've learned lessons from the past that we didn't do enough proactively to prepare
But what would
workers.
proactively even mean?
Okay, well, let's start first by just stipulating that the goal should not be job protection, but it should really be employment participation in the economy. So what we really need to do is make sure everybody has whatever skills are going to be demanded. Now, in this case, given that AI is developing so rapidly, knowing what skills firms are going to demand in 2 years is impossible, but so really it's the usual lineup, which might sound boring, but we need to be doing much more investment in modernizing worker training in community colleges, is improving information systems so people know where the high-paying jobs are.
Are you, okay, you can either take one of two sides here.
Yeah.
There's the Dario Amodei side from Anthropic, who says, 50% of white-collar workers are just going to be wiped out in the next couple of years. Or Jeff Bezos was sitting in the seat that you were sitting in recently with us, and he said, you guys are all missing the boat. We're going to have way more jobs. You have no idea what you're talking about, people. So which is it?
With all due respect to the huge, pronouncements coming from the Silicon Valley guys, this is going to be either the greatest thing ever or lead to human apocalypse. I don't think either one of those is accurate, and we're not seeing signs pointing to either one of those directions.
What do the numbers say right now? When you look at the jobs market, it looks pretty tight.
Super interesting. In fact, we're really not seeing either evidence of a productivity boom or large-scale labor disruption. If you squint and look very closely, there is evidence that in specific experiments, in specific sectors, in specific fields, the use of AI is actually making a certain set of workers more productive.
Right.
And a lot of whether that's happening is whether the firms have so far or yet redesigned their work processes to take advantage of it. So we might eventually see that, and that might eventually lead to disruption. It's certainly going to change the nature of tasks that humans perform, and so that's where the preparation comes in.
Do we think that we're in an artificial labor bubble? And let me explain what I mean by that. One is obviously you have electricians and plumbers and all sorts of people, construction folks, building these data centers. And the question, of course, is that forever? By the way, if that's forever, we have a problem because the CapEx cost of this is wild. But there's another piece to this that I keep hearing about, which is, so many companies are actually now hiring more consultants. They're bringing in new people to help them integrate the AI. And the question also is that a temporary phenomenon? You'd hope actually it is from a productivity standpoint. And what does that mean to the numbers we're seeing? Is it sort of a head fake?
I'm going to hope that that's not a temporary phenomenon, and I'll tell you why those stories make me as a labor economist particularly optimistic, because it suggests that this isn't just going to be about the leading firms we're hearing about today building the frontier models, but that more and more firms are going to rely on people to help them integrate AI into their workforce processes to boost their productivity of their workers. That's where the new job creation is going to come from. And so I'm pretty bullish on the market economy, and I do think that firms will innovate and create new jobs.
If we're sitting here together in a year from now, will we know? When will we know?
I don't think we're going to be through this anytime soon. I expect in a year from now we should see more evidence. I hate making predictions, but I would expect we would see more evidence in the large scale numbers, both with productivity and jobs, that AI has made a difference.
Okay, Melissa, thank you. It's great to see you this morning.
Thanks for having me, Andrew.
Appreciate it. Joe,
Okay,
back to you.
thanks,
We can
Andrew.
talk AI with, you got the Treasury Secretary coming up.
I don't know, I got a yen for yen this morning. I think we all did. Coming up, Treasury Secretaries on Squawk Box, including Scott Bessent, joining us live from Washington straight ahead. And then later, we'll talk to a couple of former secretaries, Tim Geithner and Hank Paulson. Squawk Box will be right back. Coming up, Treasury Secretary Scott Bessent is going to walk us through the United States' first currency intervention in Japan since 2011, how it happened, and what comes next. Squawk Box will be right back. The U.S. and Japan confirmed a coordinated yen buying intervention. Join us now with the details of how it came together. Treasury Secretary Scott Bessent. Mr. Secretary, it's good to see you this morning.
Joe, always good to be with you.
You know about the yen. I guess you had some experience in the private sector, maybe from the other side of the trade at one point. Is there anyone who is as adept at working with yen? I don't know. Is it manipulation? What is it? Support? Or in the last case, it wasn't support. It was actually shorting it, I think.
Well, Joe, I think it's important to have a framework here, and just a level set here. The framework begins with the strong relationship between President Trump and the Prime Minister, and I have an extremely good working relationship with my counterpart, the Finance Minister Katayama, and I've been going to Japan since I think 1989. And have more than 50 or 60 visits here, so I'm well versed. But what's important here is we've been in close contact with our Japanese allies, and they are great allies in the region, both militarily and economically. And we understand that they are making serious efforts to stem the substantial undervaluation in their currency. And Joe, this is more than just a market intervention. That through our conversations with them, we believe that they are going to continue to put the right policies in place that will lead the yen to get back to more of a normal equilibrium price.
Yeah, I was wondering whether you've got some ideas about how Japan needs to do that, because there obviously are still some problems. Rates are probably negative there with the short-term rate at 1%, and we think we've got it tough here in terms of debt as a percentage. I think they're at 230% right now. That's almost hard to believe, Mr. Secretary.
Well, there are a lot of ways of counting it, because most excuse me, much of it is held by Japanese citizens and by their pension system. So, I think if you net it down, it doesn't look like that. And the other thing too is, look, they're moving toward budget discipline. They're going to have a primary surplus for the first time. And Joe, if I put on my economic historian hat and look back, that I in the late 90s, 97, 98, the Asian financial crisis, in my opinion, part of it was triggered by an overly weak yen. So I think a stable yen is not only important for the U.S., but it's very important for the entire region, because if the yen were to weaken substantially, then the other currencies would follow it. We've seen excess volatility in the Korean won. Many people believe that the Chinese RMB is undervalued. So, given the trade flows, given the size of the economy, given their contribution to the global savings market, very important to have a stable yen. The Japanese government understands that, and we are proud to stand with them in implementing their policies and help them stabilize the region.
It's obviously that for a lot of reasons, it's probably in United States' best interest that we don't see a run on or a continued run on the yen. I just got to ask you, you're a sly dog. When you wrote that down, buy 5 to 10 billion, and the printing looked so big. You've done this before, haven't you? Where people are looking over your shoulder. Did you need to be reminded of things to do? Buy 5 to 10 billion in yen. Tell me what was really going on there, Mr. Secretary.
Well, I just wanted to make sure that all the reporters looking over my shoulder also knew the symbol JPY for the Japanese yen. So.
Okay.
Instead of shorthand to yourself.
Yeah, I was going to finish the list. The rest of the list was, like go and have lunch with the supreme leader, play tennis with Putin. But I thought I would just leave it at the buy 5 to 10 billion of Japanese yen.
Well, it's got a much better chance at a coordinated probably intervention, because Japan blew through about, I don't know, how much did they blow through in April and May? That didn't really stem the decline, and speculators are on notice now. If they lean too hard on the carry trade, they're going to get it handed to them. That's part of the rationale, I guess.
Well, Joe, I think in 2011, 2012, when the yen, which was substantially overvalued at that point, it was about 78. But even then, and pre-Abenomics, the yen was bouncing around 78 to 82. And at the end of the day, you can give market signals with intervention, but it's policy that turns it. So it was the beginning of Abenomics. Prime Minister Shinzo Abe. It's been a resounding success. Japan has come out of deflation, and they're back. And I think here we can give market signals, but at the end of the day, it's going to be policy and fundamentals. And the U.S. decided to join because we are very optimistic on their policy path.
Would it also require a rate hike by the Bank of Japan, do you think?
I think that the policy path, I'm not going to prejudge what the BOJ should do. I've known Governor Ueda for more than 15 years, and I believe that he will do what is needed. And I think that the Prime Minister, who is doing a fantastic job, and if we look back, one of the little noticed things in Abenomics was something called Womenomics. Japan had traditionally had a very low participation relative to Europe, relative to the U.S. of women in the workforce. And now, in Japan, we have women with 2 of the top 3 jobs. But it is going to require policy to follow up with the intervention, and I'm highly confident we're going to see that.
I guess one thing we definitely don't want is Japan selling treasuries to do this. So you have encouraged the Federal Reserve to upsize. Can we call it a FEMARF? Is there an acronym for this? The Foreign and International Monetary Authority's Repo Facility. Have you ever called it a FEMARF? Can I coin that? Can I trademark that?
Sorry, Joe. A day late and a yen short. It's called the FEMA facility, and we'll give you something. We'll come up with something for you next time. And look, the facilities that the Federal Reserve has, whether it's the FEMA facility or the swap lines, the purpose is to protect the U.S. economy and to keep any volatility offshore, prevent it from happening before it reaches our U.S. shores. And the FEMA facility was done in 2020. Size of the bond market was much smaller then, so I think it would be reasonable for the Fed to consider upsizing the facility. I'm happy that the Japanese government wants to use it and draw on it, and it's a completely secure lending facility. We have swap lines outstanding, so it's really no different than a swap line that the country posts collateral, and we lend them the money to intervene in this case, and I think it is a very robust facility, and I think it was set up for occasions just like this.
Mr. Secretary, you spoke about this as kind of a currency intervention as diplomacy because we have a close relationship with Japan, because we're trying to work with them on a lot of things. But the Treasury Department actually sold euros to buy those yen. The sale of the euros, is that kind of collateral damage in this, or was there diplomacy that was at work there too for partners we may not be as happy with lately?
No, the Europeans are obviously in close contact with our European partners, including at the central bank, including some of the finance ministers of the nation states. And I assured them that it was just a reallocation of our reserves. Seems to me the euro is much closer to an equilibrium price. I'm not going to talk about where the euro should or should not trade, but it's really the substantial undervaluation of the yen here and the policies that the Takaichi government is putting in place to change that.
The idea of the carry trade, obviously you're protecting against people relying on that carrying trade too heavily. Do you think it would be a bad thing if the carry trade went away entirely, or does it depend on if that's an orderly move?
Well, I don't think the carry trade's ever going to go away entirely. Japan has a gigantic surplus of foreign assets, and they provide liquidity to the rest of the world. Japan Inc., since the 70s, 80s, all through the 90s up until now, has accumulated substantial overseas assets, and I see no reason for that to stop. And it's just the level of the yen that could trigger other problems or trigger competitive devaluations, which is unhealthy.
A lot of things are making it sort of tough on Japan right now, Ms. Secretary. I'm just wondering whether just purely fiscal and even monetary changes can really help. I mean, there's a lot of capital inflow. It's good for us. AI, all the money's coming here around the world because this is where the returns are in AI. The war in Iran makes they're importers of energy in Japan. I mean, it's just what's the Shakespeare quote? How all occasion doth inform against us. It just seems like one thing after another has put additional pressure. Could they raise rates like they should? Could they end QE, or would that just compound their problems?
Well, a lot to unpack there, Joe. So let's start with, in my ex post over the weekend, I said, I believe the Japanese government understands that we're at the end of Abenomics, or one phase of it, and now we're in the implementation stage. it has been wildly successful in reflating the Japanese economy, normalizing the economy, bringing them out of deflation. And I think now we're going to see strong growth. They've had strong wage growth. The economy is quite strong. Japan's tech sector, while it doesn't match the U.S., is very, very strong. Japan, Korea, two of the strongest in the world. And then when you talk about the energy price, Japan is a substantial importer of energy from the Gulf. And we've seen President Trump last week threatened what would have been one of the largest military campaigns, or the largest military campaign since World War II, against the Iranians. And now because of that, we are in talks with the Iranians. And I think there is a chance we may have a deal today or tomorrow to open the strait and move towards a more normalized position in this conflict. And that's because if their Air Force is wiped out, their Navy is wiped out, substantial portion of their missiles are wiped out. More importantly, their missile production capability is wiped out. So anything that happens in the Gulf will benefit Japan and indeed the rest of the world, Joe.
Just to clarify on that, Mr. Secretary, the idea of having a deal today or tomorrow to reopen the strait, would that be reopening the strait, but the Iranians somehow having the ability to charge a toll on that? Or would that be reopening the strait and it's free and clear and anybody can move through?
I think it would be freedom of movement. And even though things are still a little dicey there over the past few days, we saw quite a few ships coming out even now. So, I'd expect the energy prices to settle back down, which, as I said, will be good for the entire world. And, once the strait reopens, there are hundreds, if not 1,000 ships sitting in there waiting to go out. And, Becky, it's not just energy, it's fertilizer, it's refined products, it is the various industrial gases. So, I think that we could see a big relief trade as those prices go down.
In fact, as you've been speaking, Mr. Secretary, the WTI price is dropping. We were looking at oil
82
at 82 earlier this morning. Now it's trading at about 78. I guess you watch those levels pretty closely. What do you watch on a daily basis? Is it oil? Is it the 10-year? Is it the 30-year? The 2-year? Is it the yen? What are the things that you're watching most closely?
All the above, Becky. But what I really watch is how the U.S. economy is doing, and the economic numbers have been strong. We had manufacturing ISM strongest since 2022 when we came out of COVID. And manufacturing is back in the U.S. We are seeing substantial non-residential building going on. So those are construction jobs. As Andrew asked the professor from Notre Dame earlier, is this temporary or is it sustainable? And what I would say with overall manufacturing, if I look at my hometown, Charleston, South Carolina, Boeing is doing a 50% increase in their production there. So those are construction jobs, but those are going to morph into 1,000 great high-paying industrial jobs. So we're seeing this manufacturing renaissance happen.
What wouldn't help the yen is if Warsh and Co. raised rates in September. I just wonder whether that should we be thinking about that and just opine on what you saw at the last meeting, the lack of the lack of any sort of guidance and the criticism about no transparency, and we don't know what the roadmaps are, and we don't need a cheat sheet on the test, but we need to know what's going to be covered in the test, and it's causing volatility in the bond market because of a 13 basis point move. What do you make of all that, Mr. Secretary?
Well, Joe, I think of this as a detox, that both the financial markets, financial journalists, no one on this screen, but many others, especially in print had just become stenographers. And same for many of the Wall Street firms. Look, I began Wall Street in 1984, and you never knew what the Fed was going to do, and you had to be positioned accordingly, and you actually had to do your own work. And I think we are seeing a detox here, and all this with forward guidance that I think every meeting should be live, and that market participants should make their own judgments. Because I can tell you, in my opinion, what caused the great inflation, the Fed was late raising rates. But the reason they were late raising rates is that November of 21, it was clear that the economy was hot and the Fed needed to do something, but they kept QE going until the month before they started hiking rates. So they were buying hundreds of billions of dollars of bonds. And that was because they felt locked in with forward guidance. So I think Chair Warsh wants to maintain optionality for optimal outcomes. And I am sure that under his leadership, the Fed will balance between their growth mandate and their inflation mandate.
There is a lot of question, though, of how to orchestrate a stand pat on rates for the chairman with the economy you described. I mean, if you back out all the imports of infrastructure for AI, what's that other number was 3.9 or something, I think, wasn't it, for prices charged? I mean, that's strong. Inflation's still above target. Will the promise of AI in terms of productivity, will that arrive quickly enough for Chair Walsh to bring down the inflation rate in a way other than trying to slow the economy with higher rates?
Well, I think we have to look and think, what does an increase in the short-term rate actually do? So we'll see on that. But the other thing too is, I think that there are a lot of short-term indicators here, much of it energy related, that will work its way through the system. When we had the MOU with the Iranians in early June, for the June inflation numbers, we saw one of the biggest drops in years. So there's a very noisy component in there. But what gives me the confidence is that the underlying numbers, they are very tame. So core inflation away from the fast-moving segments that are impacted by energy have been very quiescent, and I think we're going to continue to see that.
Secretary Bessent, we've been watching the AI trade so closely, and there are some people, including Steve Eisman, who was with us last week, who said he thinks everything is an AI trade right now, and it's either going to go very well or very badly, depending on how that shakes out. He related it through to companies even like a Caterpillar, which, by the way, is up more than 8% this morning on stronger than anticipated earnings, but it's been down over the last month as people worried about whether the AI trade could continue. Everything in AI is related pretty closely to interest rates. If interest rates rise and it's harder to get debt, or it's more expensive to get debt as a result, and that data boom and the rest of it kind of slows down, do you think that impacts the overall economy in a big way, or do you think that's more of a market play?
Well, Becky, we've seen interest rate rise, and we've seen no let-up in this AI CapEx. And look, I like Steve, but I think that to categorically say that everything's an AI trade is an incomplete thought. That I think the underlying dynamics of the economy are very strong. And one thing that is very interesting to me is we are seeing this small business formation, and we can see it as we talk to the nation's banks, as we see the filings at the IRS, and for new startups. We are seeing like this big Main Street and small business revival, and I think a lot of that may be due to AI. Wall Street Journal had an interesting story, I believe it was last week or the week before, that said you're seeing the rise of the one-person startup, and a lot of that is AI enabled. And the professor from Notre Dame was talking about what we were seeing in terms of AI implementation. And I'm old enough to remember what happened in the 90s when we saw the office tech boom, and you saw this whole cottage industry spring up that didn't previously exist. I think they were called system integrators, and they were bringing the office modernization revolution into both small, medium, and large businesses, and I would expect we could see a boom in that over the coming years. So, but on the other side, we are seeing the rest of the economy is performing very well also.
Yeah, the ism and I mean, the stock market, obviously. Inflation is still one of the things that, especially during a war, with a closed strait, at least as of the day, is still something that if there was anything that was going to be a bump in the road, it still worries about inflation. Are there indications to you that the underlying problem with shelter or with services or with wages, are there signs that maybe the good numbers we just saw on the past reports, will that continue even though oil's back up and give Chair Warsh some leeway in September?
Well, again, I don't think that Chair Warsh or indeed the overall FOMC, you got to remember, Joe, when they raise rates here, if they raise rates, they're looking at long and variable lead time. So they've got to be thinking what's going on 9, 12, 18 months out. And I do think that there are a lot of things going on there. We're seeing shelter owner's equivalent rents come down, and that's where core inflation is. And the media doesn't want to report it, but President Trump has done it again, same as he did in his first term. In the president's first term, hourly workers did better than supervisory workers, and now what we're seeing now is the bottom quartile of wage earners have had year over year 5.5% wage gains, and that's 3 times more than the top quartile. So look, this inflation and this affordability crisis that the Biden era got us, this big increase in, or step function increase in price levels, there are 2 ways to combat that. You can slow the inflation, which I do believe the core inflation is slowing, but for working Americans, real wage gains, and we can see that the bottom 25% of workers had a 2% wage gain, and with everything that we're seeing in the media, it's difficult to discern. But we think that the American people will be feeling that over time, and they're also feeling the benefits of the working families tax cuts. They also oversee the IRS, and 44% of American households had one of the president's signature policies: no tax on tips, no tax on overtime, reduced taxes for seniors on Social Security, and deductibility of auto loans. So we are starting to see, I got sick of hearing about this K-shaped economy. I can say here definitively the K-shaped economy is over, and we're seeing more of a C economy where the lower end of wage earners are finally clawing it back, just like they did in President Trump's first term.
Before we let you go, just to return to the yen one more time, have you written anything down while we're talking, like I'm good for another 10 if necessary, or tell the Fed to increase the FEMARF? I'm calling it the FEMARF. I don't like your FEMA, I don't know, but it will. Rarely in the past does 1 or 2 interventions solve the problem if the underlying problems aren't, like if they don't raise rates in Japan, we may need to put more. Are we willing to do more?
We're in close contact, and Joe, you got to think that the U.S. would not have joined if we were not very, very optimistic about the policies that the Takaichi government's going to implement. And I think they well understand what needs to be done here, and they're getting out of this vicious cycle, because do they have an inflation problem? Yes. Is part of the inflation problem due to the weak yen because of the pass-through? Yes. So one of the ways to give self-help as they've been doing, is to stop this excess volatility in the yen, and we're in constant communication with them, and we will do whatever it takes to support them in a way that helps the American economy, the American taxpayer, and stabilizes the global economy.
All right. Just wondering if there's a crush like behind you of reporters when you're sitting there, for a person to get the best seat
To check out the to-do
to
list.
check out the to-do list.
Well, I can tell them what's on my to-do list. It's get to the grocery store this evening. I haven't been in a while.
I know you probably have a lot of other things to do. We appreciate all your time this morning, Mr. Secretary, as usual. Thanks. Thank you.
Good to see both of you.
Okay.
Hey, very quickly, let's take a look at some of the boards.
Oil,
because oil moved pretty drastically on what the Secretary was saying. He said that we could see an opening. He believes we'll see a deal potentially today or tomorrow to reopen the strait. As a result, take a look at oil prices. WTI moving pretty rapidly. We had been at $82 a barrel earlier this morning. At the top of that interview, we were trading at $80 a barrel. Now it's off by $3.55 to $76.79. That in turn has impacted the futures pretty rapidly as well. The Dow was up by about 300 points earlier this morning. Now you're looking at the Dow up by 513 points. S&P had been negative. It's now indicated up by about 5 points, and the NASDAQ is up even more than it had been earlier at 227 points. You've also got Treasury yields that moved on this, the 30-year in particular. We were looking at a 30-year yield of 5.25 when the show began at 6 a.m. It's now trading at 5.21. And in fact, the entire complex had been yielding higher. It's now lower across the board. The 10-year is at 4.65 and the 2-year is at 4.22.
How's the Dow?
The Dow's up 500 points. It was up 300 before.
Yeah, I saw that. Oh, I saw it was up 500.
Oh, you were.
No, it just
Oh, now Dow.
just announced it again. Yeah.
Let's get over to Andrew. He's got a big guest coming up as well. Andrew, good morning again.
Thanks, Becky. Join us right now. We're here at the Aspen Economic Strategy Group's annual meeting. Peter Orszag is here. Of course, he is the Lazard CEO, former Washington everything. I don't know. By the way, they call this the pregame for Jackson Hole now. That's what I was hearing last night. So let me just ask you about all of this, because we've been watching the markets. We heard what the Treasury Secretary had to say. On the oil piece of this specifically, and then that's translating, I think, into the equity markets right now, but you tell me, does this make sense to you?
Yes, temporarily, but I think the thing we need to realize is even if there is a deal, it's not clear that it's a sustainable deal. We've been through this before, and at least our geopolitical team is skeptical that any deal of this type will be enforced over prolonged.
But
so
we
we've got a
We
muddle.
keep saying this
Right,
up and
it's a
down,
muddle.
up and down.
So there are two ways out of the muddle. I think we're going to be in a muddle for a while. There are two ways out of the muddle. The first is that the Chinese intervene and really pressure the Iranians for a real deal. The Chinese have shown no inclination to do that. And the second is a significant escalation beyond just air to even ground forces, which we have shown no inclination to
If
do.
you're right, though, and we've seen this now over and over again, why is it that the market reacts this way? They hear the president say
They
something,
want to
or in this
believe.
case, the
The market
treasurers,
wants to believe. Yeah,
and should they believe?
not so much.
Not so much.
And the other thing here that's important is the lagged effects of supply shocks, like what we're seeing out of the Middle East, is a key driver of inflationary dynamics, and those lags take a while to feed through. So the other thing that the market, I think, needs to appreciate is just because the problem is, quote, solved temporarily, it doesn't mean that there aren't some more lagged effects coming through to, downstream products.
Okay, I want to throw a whole bunch
Okay,
of
let's
rapid fire
okay,
at
rapid
you. Okay,
fire.
so Japan, the yen, you heard the Treasury
Yeah.
Secretary. The question is, do you think that this is a one-off, or do you think this
Here's
is something
the key. The Japanese need to raise rates. Wage pressure is significant. There have been questions about the independence of the central bank. By the way, if they raise rates, you don't need to do this other intervention. The yen would appreciate just from the interest rate increase.
But the argument, and he didn't say it directly, is could this just be an effort to buy time to get them to raise rates?
Well, then it makes sense. But if this is just by itself, it's going to be feckless. If it's a pathway to raising rates, and the question becomes, did you need this pathway, or could they just have raised rates? But take the win if this is a pathway to get what actually needs to be done, which is the higher rates. Secretary mentioned multiple times the policy piece. I'm hoping that's what he meant. I think it may be what he meant.
Okay. He also talked about a shift from this first time I've heard it, a K-shaped economy to a C-shaped economy. Is that what you and your team are seeing?
I think that declaring the death of a K-shaped economy is a little bit premature. We'll have to see. There are some encouraging signs, but you have to remember consumer confidence overall is still pretty low. People are not feeling that, and if you look at many of the firms that sell to consumers, it's still mixed.
Okay, big debate here.
Yeah.
I heard it over and over again. Regime change at the Fed. By the way, there's so many Fed members here. As I said, Jay Powell's here, Neil Kashkar is here. I saw Austin Goolsbee, Raphael Bostic. What do you make of the sort of the new Kevin Warsh Fed, the shift towards, frankly, less transparency, a shift towards trying to do what the secretary said, which is, not telegraph exactly what you're doing at all times. Some people here seem to think this is a great idea. I talked to a whole bunch of other people who seem to think this is a terrible idea.
Put me in the latter camp. Well, maybe not terrible. It's not what I would do. Look, he's the Fed chair, and I think we should let him, explore the way he thinks the Fed should work. It's not what I would have done. I think the forward guidance and the prior system was working just fine. So we're going to go through a lot of kind of transition, and it's not clear whether we wind up in a better
One of the
place.
things that I can't understand is clearly Kevin, who's been at the Fed before, knows this world very well. How much of this can he do on the regime change piece, not the interest rate piece, the regime change piece, can he do somewhat unilaterally, meaning on his own, versus needing to bring along the rest of the board with him?
I think he's going to wind up being able to do a lot of this, maybe not all of it, but a lot of it, because even though there are independent votes and what have you, the Fed as an institution does not really want to be seen bucking the chairman too harshly, and so I think people will give him the benefit of the doubt.
What do you think of the idea, by the way, of going from sort of 8 meetings, for example, to 6 meetings? Is that on a category that you don't like, or you're saying it's okay? Or
That's okay. I'm more concerned about the lack of the sort of toning down the degree to which you're communicating and the information you're providing. Because I think the market, the risk is then you get sharper responses to each intervention. It's actually very similar to the debate over whether you should be waiting on the AI model releases or do them step by step. The question is, do you allow systems to respond if you do things, basically feeding more information?
AI, by the way, is the other piece of this whole puzzle. And we were talking to Melissa earlier about sort of the Dario Amodei view of the world, which is that white-collar jobs are just going to be slammed and destroyed, and the Jeff Bezos version of the world in which, jobs are super and plentiful. What is the Peter Orszag view of that?
I think there will be jobs created, but we may go through a difficult transition. Labor markets deal well with, or can handle, large shocks that happen slow, or large shocks that happen slow, or small shocks that happen fast. This is a potentially big shock that may happen fast. Labor markets don't deal well with that. The second thing I think we really need to be watching is the business models for, I'm a big believer in this technology. The advances are remarkable and exciting, but the technology working and the frontier firms being the ones who benefit from it are two different things. And the question becomes, as we move to open source alternatives, and also especially local compute and edge AI, will those business models come under pressure?
And then the last piece, and maybe it goes back to the Fed, but it goes back to the larger economy, which is the inflation story.
Yes.
You've been talking about inflation.
I think I remember being castigated, maybe even on the show at the beginning of the year for suggesting.
Did I castigate you?
Maybe one of your co-hosts. But
did you?
I don't know. Memories are vague. It's fuzzy. But look, I think Adam Posen and I, at the beginning of the year, suggested that inflation may surprise to the upside, in part because you really need to pay attention to the supply side. This is the big difference. Historically, people looked at inflationary pressures from the demand side. The demand
by the way, you didn't know there would be a war at the beginning of the year.
No, but we did highlight a lot of different things that, well, also on your show, I remember saying that we expected an attack in Iran, and it happened a few weeks later. But part of the rationale was just there were lots of things and uncertainties happening on the supply side that was going to feed into inflation.
And therefore, by the way, Kevin's sort of 2% is 2% is 2%. What does that mean to the markets longer term?
Well, also, I think the hardest part is as the inflationary dynamic has shifted more to these supply sides. We've seen the pandemic, we've seen tariffs, we've seen now the Middle East. The stance of monetary policy is really hard to figure out because they will continually think that these are one-off shocks, But if you have 5, 6 of these rolling together, it sure looks like ongoing inflation.
Okay. Peter Warzak, thank you. Always good to see you.
Always good to be with you.
Thanks. Becky?
Andrew, thank you. All right, folks, it is a few minutes after 8 a.m. on the East Coast, 8:07 actually, and you are watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. We've been watching the futures this morning, and they have picked up over the course of the morning. You're now looking at the Dow futures up by about 500 points. That comes after the Dow closed at a new record yesterday. S&P futures up by about 4 points. The NASDAQ indicated up by 211, and we will continue to watch all of this along with oil prices, which are lower after Treasury Secretary Scott Bessent told us that he believes that they could have a deal to open the strait sometime later today or tomorrow. As a result, WTI is now off by more than $2.60 to 77.77.
All right, well, the embattled Paramount-Warner Brothers merger remains on hold due to antitrust concerns. CEO of the TKO Group and, full disclosure, my longtime agent, made him so rich, Ari Emanuel, is coming to the merger's defense, writing in a Wall Street Journal op-ed, halting the merger endangers Hollywood's economic viability and creative ecosystem. It's Ari Emanuel, needs no introduction, probably joins us this morning. He's also executive chairman of the WME Group. Both TKO and WME obviously have billions in dollars in media right deals with Paramount. They wrote it right into the intro because they didn't think I'd ask you, I guess, Ari, but that would be my first question. We go way back. But do you have, does that inform your opinion on what's happening with this deal, that you've got some clients that deal with Paramount, or that you signed media rights deals for one of your companies with Paramount, or is this purely philosophical?
I have media rights deals at Paramount. I have deals all over the business. If you just look at the last 3 weeks of the movie business, Chris Nolan, Matt Damon, Tom Holland, and The Odyssey. This past weekend, Tom Holland and Destin, the director at Sony. So our company deals with every single one of the people in the industry.
All right, that you would say that
no, it just informs me because it's not 2010. It's 2026.
Yeah.
It's not just the movie theater business. It's not just the cable television business. You have to deal with streaming. If you just take the merits of the deal right now, they say that they have too much control over the theatrical business. They say 27%, but they don't include Amazon, MGM, which just had Project Hail Mary. A24, which I think Google just invested in, and they have Backroom, and then Lionsgate that had Michael. So if you do that over the last, I think it's 12 months, it's 18% of the marketplace in the theatrical release, and it's 22 over the last 6 years. And this is a guy that said, hey, I'm going to make 30 movies a year, 45-day releases. Adam Aaron, who you had on last week, said in an op-ed, I support the deal. He's the biggest player in the theatrical business. And I think recently the governor said this is going to hurt jobs. You know, if it was 2010, I would say you're right, but it's not. And on the TV side, if you don't include YouTube, they're 22% or 20% of the television business. If you include YouTube, they're like 13%. So that in no way kind of is a company that has too much market control.
I mean, it reminds me of a couple of things. I remember Sirius XM. It's like, oh, those two can't get, they're barely going to make it with Spotify and all the other things. And then it reminded me of the Kroger, I don't know, a couple of supermarkets. Worrying about old line supermarkets when you've got Walmart and Amazon and everything. It's like fighting yesterday's. Normally, your people, you're the Democrats, and you pointed out in your op-ed piece that you've been a lifelong Democrat, but normally you hear it from that side, and that's what you're arguing, like fighting last decade's battles.
Listen, I think we need 3 strong streaming players. This would be the 4th. You have Amazon, Netflix, Disney, and this merger. Not that there's not other players, but in the streaming world. That's really great for the economy of Hollywood. Let's just talk about the last 6 years. We've had 4 years of COVID, then we had a writer's strike. It's been 6 very tough years for the movie television business. This merger with him committing to 30 movies, 45-day release, 170 TV shows, he's going to spend probably, he says, $30 billion in content a year. So, I mean, we need that for the economy of Hollywood. You know, it's one of our biggest exports. And I just think standing in the way of this is, if we thought about it, I think it's a little bit political. 65 countries have approved this deal. This current administration, and that's politics, took 8 months to approve the deal. EU is no joke when it comes to approving things. They said yes. So when you look at the totality of it all, you're like, what is this about? And I think it's a little bit about politics, about CNN. And I think there's a way around that if you just get in a room, not cost everybody money, and say, okay, let's put an editorial board over the news organization so that everybody's calm about news and possibly Larry Ellison controlling CNN and CBS. That's an easy solve. And then we can get to the business of making movies and television, which has been difficult over the last 6 years.
Yeah, you were even more strident, I think, in the op-ed. You said it's a lot of it is politics and worries about CNN. And I would, you know, this is where we probably differ. Whatever Ellison can figure out to try to fix CNN is a positive. It's not something you need to allay people's fears over. That Ellison's not going to do.
Here's the funny thing, Joe. You and I disagree about what needs to be fixed, what doesn't. Yeah, I mean, you know, I think news in general, the kind of is in the low 20s of kind of what people's favorability are.
Not squawk box.
Definitely not you and Becky and everybody. But I would say to you, they get news from all over the place. But there's a way to solve that for the 13 Democratic AGs that have brought this claim. I also think they have the right to do it. We should get to a quicker trial. Hopefully it's October. This judge will decide soon. But, you know, if all of a sudden AGs get to the state AGs after the federal government gets to decide after 8 months of rigorous, and the world, 65 countries said yes. You know, this is about economic trust. You want to be able to do M&A in the United States and not have that be affected. So I think that does put
Ari.
Hey.
It's Andrew here. Hey, here's you know, we keep talking about CNN and the politics of it, but I think the thing that I keep hearing about in Hollywood is literally just the physical number of films that are going to be created over the next 5 years. Obviously, David Ellison has said that he's going to do 30 films a year. Currently, Paramount does 15 a year. Warner does 15 a year. So the good news is it's not less as a function of this deal, but it's clearly not more. My question to you is, as somebody who works in this space,
no, but that's not true.
Do you actually believe?
That's not true.
Go ahead.
I mean, Paramount was doing 8. He then said, I'm going to make 15, and now he's making 15. He said in the merger he's going to make 30, and it's in the document that he had to deal with the federal government. So, yes, it's actually factual because it's with the federal government.
No, and my question to you is, do you think in 5 years, if we're having this conversation, that they'll be making 30 films a year still, and should that be the measure?
Well, they're only, over the last 6 years, 22% of theatrical. I think it should be the measure. He has said there's 3 objectives in his business: streaming, movies, and sports. So, I don't know. I mean, to kind of have a proper ecosystem in the streaming business, I think you need theatrical releases. So, yeah, I think that's what he'll be doing.
So, Ari,
and then
the
other question.
Go ahead, Andrew. Sorry. No, go ahead.
No, go ahead, Joe. Go.
No, I was going to.
I want to talk to the Democrat. Give me Andrew.
Go ahead. Go ahead. You guys can. You guys can have a love fest.
I'm an independent, Ari. I'm an independent. My question.
Yeah, Andrew's an independent. Ari. Anyway, go ahead.
Let me ask you actually this though. You know, obviously there was a big effort to pressure Newsom on this to prevent all this from happening, and that failed. And I'm curious what you think of that and what you think the larger sort of stakes are for the state here. There was a semaphore report just a week or two ago that some of David's friends were telling him to get out of the state. I think that's probably very hard for them to do. But what do you think the larger implications are in that context?
Well, I think one of the larger implications for the country is when you have state AGs that can go against a deal that has been approved by 65 countries and took 8 months for the federal government to do. They get the right to do that. Let's have a quick trial. As I said, 6 years of COVID and writer's strike has really hurt the economy. I wish we would have get, a tax rebate in some capacity for production like other states have to bring production back home here. I think Gavin has stated that he thinks it's bad for the California economy. Entertainment is one of the big industries for the United States to export, and it's just not good. It's just not good for us. They're going to spend probably with the ticking clock, a couple $1 billion. That's not going to come out of production. That can't be good. So we've had 6 years of problems, and I think Rob Bonta should worry about bringing economic stability to the state, and not what I think is a lawsuit that doesn't hold up on the numbers and the percentages as it relates to the movie and television business. You have also this guy Norm Eisen, banging a drum. He knows nothing about our industry, hasn't been in our industry. So, and he actually stated in his tweet that this was really about CNN. So get to what CNN is. Have an editorial board that oversees it. Great, move on, make a deal.
All right, Ari. We've talked about, I'd like to talk more about just the media business in general, and we've had many discussions about, not all of them that positive, the demise of linear and everything else. Is it time for me and you should we just rent a place somewhere over on the Mediterranean and just chuck it all? I mean, it's getting tougher, isn't it? You want to do that?
It is definitely getting tougher. It's a melting iceberg, but I don't think it will ever completely melt.
Okay.
And so I think it's still a very good business. It's just not what they're contending in this deal. It's something else.
All right, we'll keep at it then. You'll keep. You're my agent. You work hard, will you? As you always do. Okay.
Yeah.
Thank
Let me
you.
go play some golf right now.
Yeah. Exactly.
Yeah.
All right, Ari Emanuel. And it says it here in the prompter once again, disclosing he is my agent. Thanks.
Thanks. Bye-bye.
All right, still to come this morning, Snap CEO Evan Spiegel breaks down the company's quarterly results. The stock is up sharply in the pre-market trading this morning. Then an exclusive interview with Philly Fed President Anna Paulson. It is her first ever television interview. Squawk Box, we'll be right back.
All right, welcome back to Squawk Box on CNBC. The futures are higher, sharply higher after Treasury Secretary Scott Bessent told us right here on Squawk Box just moments ago that we may have, once again, a deal with Iran on the Strait of Hormuz.
I think there is a chance we may have a deal today or tomorrow to open the strait and move towards a more normalized position in this conflict.
And I actually wanted to ask him more about oil and China and everything else, but maybe next time. There is oil this morning, all the way down now, down 3%, under 78.
All right, let's get over to Dom Chu. He has a look at this morning's pre-market movers. Dom, good to see you.
Hey, good to see you, Becky, Joe, Andrew. So let's start with shares of Caterpillar because they're responsible for the bulk of the Dow's gains right now. Those shares are up roughly 11.5% after the company beat on both the top and bottom lines for its quarter and then raised its full-year revenue guidance as well. Sales in Caterpillar's power and energy division grew 17%, perhaps signaling continued stronger demand for powering data centers. The company also booked orders worth over $9 billion during the quarter, bringing its total order backlog to over $72 billion. So again, Caterpillar shares up 11.5% and the biggest contributor to the Dow so far pre-market. Then you got McDonald's shares right now, which are moving up by just about 1.5% after a mixed quarter. Earnings beat, but revenue came in short of analysts' expectations. Global and U.S. same-store sales growth matched estimates, but traffic to its U.S. restaurants fell a little bit here. That to help to boost that domestic growth. The company named a new U.S. president, Sky Anderson, who is a 26-year McDonald's veteran. Those shares, remember, down just about 11.5% over the past year and a half. And then we'll end on Palantir shares, which are surging on a blowout quarter, up 15.5%. Revenue climbed about 93% from about $1 billion a year ago, and commercial revenues more than doubled. It also lifted its full-year revenue guidance and said U.S. government revenues grew by 90% to more than $800 million. That stock is heading for its best day since April of 2025. So Palantir contributing to that tech gain and Caterpillar to the Dow. Andrew, I will send things out to you in Aspen, Colorado.
Okay, thanks, Dom. When we come back, Snap CEO Evan Spiegel on the company's earnings beat and strong sales forecast. The stock is up. And then later, former Treasury Secretary Tim Geithner and Hank Paulson live from the Aspen Economic Strategy Group. We are coming right back. Welcome back to Squawk Box. We are in Aspen, Colorado. Social media company Snap reporting Q2 results after the bell on Monday. They scored an earnings beat with $1.6 billion in revenue. It's 19% higher than just 1 year ago. And joining us right now for more, Snap CEO Evan Spiegel. He did not bring his glasses on the set, but we're going to talk about those glasses in just a minute because I think that's been a big part of the story. But you beat across the board, not just, by the way, on the revenue piece, but on the margin piece, which is what I think the market was actually looking for.
Yeah, well, first of all, thanks so much for having me on, Andrew. It's such a beautiful morning here in Aspen. It was a great quarter for Snap, and I think what folks are seeing is that the free cash flow in the business is really starting to inflect, which is allowing us to offset dilution, to strengthen our balance sheet, and of course to continue investing in the future, which is so important to us.
Okay, let's talk about the future because there's a couple different pieces of that story. I mentioned glasses. We'll get there in a second. I think glasses is actually what's had people a little anxious more than anything. But there's the advertising piece of the business. And increasingly, there's the subscription piece of the business, which I don't know if people appreciate. Only 3% of your users are paying money to subscribe now, but that seems to be a huge growing piece of the business.
Yeah, advertising growth accelerated really nicely in the quarter, and I think one of the most important inputs, which are conversions across the platform, we've invested so much in driving better lower funnel performance for advertisers. We saw conversion growth of 56% year over year, and so I think that's a really strong leading input into the business because it shows we're using our inventory a lot more efficiently. In terms of the direct revenue business, that's a huge growth opportunity for us. It was more than $300 million in revenue in the quarter. It's growing about 85% year over year.
So if 3% of your users are paying, and by the way, what do they get to pay? If you're a paying customer, what do you get?
Yeah, it's less than 3% today, but it's across things like our Snapchat Plus subscription product. We just released a new subscription business called Lens Plus, which provides access to AI-powered creative tools. That's been really successful, and that's a slightly higher ARPU product and been driving some nice growth for us.
Okay, so what would you like to see that number get to? You said if you said it's just under 3% now, if we're sitting together in a year from now, what do you think it could be?
Well, as we look at the competitive set over the long term, it seems like they're able to convert about 7 to 12% of monthly active users to paying subscribers. We've got about 970 million monthly active users, so maybe a medium-term goal would be about 7% of that.
Okay, I mentioned glasses because that's a huge part of the story, and it's I think your true love here to try to create the next operating system, the next hardware, the next everything. These glasses cost what, about $2,200 right now? $2,100 is what they're going to come in at?
$2,195.
Okay, so the question I keep thinking about is how quickly those can come to market in a way and at a price point that people buy them, en masse, and how you think about the competition coming from whatever you think Apple is ultimately going to create, whatever you think Google is working on, and whatever you think Meta is going to do next.
Well, we've been working for more than 12 years to reinvent the computer and make it feel more human. I think today people are spending more than 7 hours on average staring at screens. Specs represent the opportunity to bring computing into the world, to make it a shared experience, and ultimately to help bring all the productivity gains we saw in desktop computing and laptop computing to the real world and to real world jobs, which is the vast majority of jobs, about 60%. Of jobs. So I think this computing transformation is incredibly exciting. We're certainly the leader in the space. I think specs represent a totally new category, right? If you look at the landscape today, you have very bulky but capable headsets, and then you have very limited but lightweight AI glasses. And specs represent the capability of some of these VR headsets in terms of the immersiveness and the ability to really have a full workstation experience, but with the wearability of some of these lighter weight glasses products.
But do you say to yourself, Apple's going to come and do the same thing, and Meta's going to go? I mean, so how do you think about that, given the cost of putting this all out there and the amount of money that some of these big companies can actually throw at this?
Yeah, well, I think, as we look at the history of innovation, I actually think one of the things that helps power innovation are constraints, right? And one of the things that makes Snap so unique is that we've been so laser focused on specs for such a long period of time. So I think this focus, our history of innovation, and our first mover advantage in the space, backed by our augmented reality platform, which already has hundreds of thousands of developers who build millions of lenses, gives us a real ecosystem advantage.
You're here hanging out with people like Hank Paulson and Tim Geithner and all sorts of other economists and folks. I'm curious what you think and what you're actually seeing in the economy. The Treasury Secretary was on earlier, and he said, it's really not a K-shaped economy anymore. It's a C-shaped economy. Are you of the sense that things are getting a lot better? They're a lot worse. We're in an AI bubble. We're not. What do you actually think yourself?
Well, I think it's pretty important to sort of look at the changes happening with AI sort of separately from the broader economy. I think the economy is stronger than I would have expected, frankly. There's a lot of geopolitical instability, there's a lot of fiscal instability, and I think those are big risks sort of overhanging the market in general. But it's in the United States, it's been a lot more resilient than I would have expected. I think, as I look at the AI transformation and the investment that's happening there, the big questions in my mind are, is the long-term revenue there to support the CapEx assumptions? And then, when you sort of break down the CapEx growth, are folks really building out more capacity, or are they just paying more for the capacity they already plan to build? And so I do think that we need to sort of see over the coming years, how does demand materialize?
What do you think of that? What is your answer to that? That question you're asking? No, that is the central question.
Well, I think to me, what I'd really like to see looking forward is what sorts of new businesses and new products will be built on top of this technology, right? If we look at, for the railroads, for example, it was really the oil business that leveraged the railroads to grow and become far bigger than the railroad business itself. Obviously, electrification transformed manufacturing. So what I'm really looking for are those sort of leading signs of, what are the new consumer products that are being invented? What are the new experiences that are going to drive more demand for AI computing?
The reason I ask is, I think last week when Google announced its earnings, or maybe 2 weeks ago now, it's really the first time that the market actually said, we actually think you're spending too much. And it was an interesting moment. And I wonder just about the dynamics in the business right now between open weight models and closed weight models, whether we think that's actually going to break the economics of the business. You have Anthropic and OpenAI, which are so much, it's sort of like they are the support of all this. If you believe in their valuations, you believe in everybody else's valuations. If you don't believe in their valuations, I don't know if the whole thing breaks apart.
Well, I think fundamentally we want to see pricing come down and performance improve so that AI can permeate the economy and drive the productivity benefits that we really want to see, right? That I think will lift growth overall. So I think that is a good sign that we are seeing real progress there, that token consumption is reducing while performance improves. So ultimately, looking forward, it's hard to say how that demand will materialize over the long term, but that's why I think one of the leading indicators will be what sorts of new products, services, and businesses are being built on top of this technology.
Okay, that's the big last final question, which is there a product you have seen yet built with AI that has sort of broken the mold for you?
Well, I think as we look at our long-term vision for computing, that's really what specs represent, right? A new type of operating system. We call it an intelligence system that lives in the world with you and helps you get things done and helps you get ahead on a day-to-day basis. And so if we move to a world where your primary usage of your computer is actually accessing intelligence, that could drive the sort of demand growth that could sustain the revenue projections that people have.
Claude, ChatGPT, Gemini, or XAI? What are you using?
All of the above.
All of the above. Evan, thank you. Appreciate it. It's good to see you.
Thanks so much. Great to see you.
Very good political answer. Becky?
Andrew, thank you. Right now it's time to get over to Steve Leisman. He joins us with Philly Fed President Anna Paulson in her first television interview. Steve, it's good to see you.
Hey, good morning, Becky. I'm here with Anna Paulson celebrating your 1 year and 1 month anniversary as president of the Philadelphia Federal Reserve Bank.
That's right, yeah.
And you guys just opened up this Money in Motion exhibit here for the 250th anniversary of the country, or celebration for the country, explaining monetary policy. I hope to go there and understand monetary policy on the backside of it. But let me see if I can understand monetary policy a little better from your perspective about where we're at. Give me your view of the economy right now, especially with regard to the trade-offs that you're thinking about when it comes to the dual mandate of employment versus inflation on the other side.
Right. So this is a complicated time for monetary policy. We've got an economy that's pretty strong, right? We had, second quarter growth came in, and the top line number wasn't so awesome, but when you look at investment and you look at the consumer, it looks really strong. Got a labor market that's stable, and you've got inflation that's too high. So we want to keep the labor market stable and bring inflation down. So that's the primary challenge. And so I think we need, policy that's mildly restrictive. And I think policy has been mildly restrictive to get underlying inflation back down to 2% in an acceptable time period.
How do you judge that policy is mildly restrictive right now? In other words, there are people who say that all of this investment raises the neutral rate, and so maybe you're not as restrictive as you think you are.
And I think that's one of the things that I am assessing constantly. I think that's the key question, right? So I need to see progress from here. And that means, policy needs to be mildly restrictive. So on the one hand, you have, some sectors of the economy, the housing market, for example, that are very subdued. And you have the labor market where, wage growth is very consistent with 2% inflation, right? Low hire, low fire, you're not seeing pressures on inflation in the labor market. And so those things I put in the bucket of, mildly restrictive. The other thing is I hear from price setters, CEOs of big companies, especially ones that are selling directly to consumers, that they don't feel like they can pass along cost increases to consumers because consumers aren't in a position to be able to absorb
that helps on the inflation side.
That helps on the inflation side. That's another thing that makes me feel like we're in the mildly restrictive space. But I'm weighing that against, the AI build out and the investment boom. Stock markets have been, pretty robust. So things like that. So I've got to kind of, I'm weighing all of the evidence, keeping an open mind about where we're headed from
wait
here.
and see when it comes to the level of monetary policy now, or are you sort of, it was 9-3. Was it a close call for you at the meeting?
So for me, it was not a close call. I think that, we're, to me, we've, the evidence so far suggests we're in a mildly restrictive stance. Now, there's a couple of things, I just talked about this, weighing the balance between mildly restrictive and not restrictive enough. But the other thing is we've got to see where's underlying inflation, right? We've had, I'm trying to measure the depth of water in a pool, and there's rocks being thrown into the pool, tariffs, energy shocks, things like that. And so, what's the level of the pool? When I look at underlying inflation, when you try to strip out the effects of those things, I see it somewhere in the range of 2.4, 2.8. Maybe there was a little bit of, mild progress over the last several months. But I want to see more progress on that, and that's what I'm really focused on to gauge our progress.
And if you don't see that progress?
I think if we don't see that progress, then we have to be open to recalibrating monetary policy. We need to get to 2%.
And that means higher rates in that sense, right?
Could be higher rates, could be, same rates for longer. We have to, I'm keeping an open mind about what's going to be appropriate.
A lot of people have looked at this and said, it's a supply shock. Let's look through it. So you could call it Superman monetary policy, and that we're just going to look through everything, right, with our X-ray eyes, and we're not going to react to it. But one of your colleagues, Neil Kashkari, said, you know what? There's a role for the Fed to play in addressing supply shocks. What do you think about that?
So I've definitely been of the view that you should look through supply shocks. I think that, the June PC inflation data, kind of validate that, right? We saw there that when we had the lull in the conflict in the Middle East, oil prices came down, we got inflation relief, right? If I had tried to affect that through monetary policy, I would have been, too late, it wouldn't have hit at the right time. So that, that's the logic for looking through supply shocks. Now you also have to keep, so what I'm looking for is, what's the level in the pool when I can get rid of the shocks, but also, are there any second round effects, right? So that's where monetary policy has a real role to play, to keep those shocks in their lane.
You have a Fed chairman who wants to perhaps suggest some big changes at the Fed. I want to ask you about some of those changes. What do you think about the idea of not providing forward guidance or the reaction function? You just provided us a whole lot of reaction function, which we didn't get from the Fed chairman. What do you think about that idea?
So when you ask about forward guidance, I think forward guidance means something pretty specific. And so so it really depends on the economic circumstances, right? So if I'm in the depths of the financial crisis or the COVID crisis, interest rates are at 0, then I can provide more stimulation. I can stimulate the economy by letting investors know, hey, we're going to be at 0 for a while. And that's appropriate forward guidance, right? It's dictated by the economic circumstances. If I think about right now, I just told you I've got an open mind about where we go from here. So I can't provide any forward guidance about where I'm leaning because I'm weighing the evidence along with everybody else.
But are we better off if we don't hear that from the Fed chairman or from the Federal Reserve? Are we better off with less information or with more information about your thinking?
So I'm sharing my thinking, and I am happy to share my thinking.
Talking talks, I get you. How about going to 6 meetings a year? What do you think about that idea?
I think, so one of the things the chairman has done is, come in with all the task forces and, I think it's great to take a fresh look at the way we do things, right? And I'm excited about those conversations. I'm excited to consider, what's possible. And so I'm, I guess, like monetary policy, I'm open-minded there too. I want to understand better the trade-offs of, 6 versus 8, how that all works. But, I think it's healthy to have a good discussion about that.
All right, one more in this regard.
Okay.
The dot plot. Do you want to give us your dots or do you not want to give us your dots?
All right, so the dots, sometimes the dots are wonderful, sometimes the dots are not helpful. I know that when I sit down with my team and we, think about how we're going to write down our own dots, that is a very healthy discussion. because I have to get monetary policy synced up with how I see, inflation going, how I see the labor market going, how I see growth going, and that's a healthy, like internal consistency check. So it's a really valuable exercise for me. Now, is it a valuable exercise for markets? Does it help to communicate things? Do people get too obsessed with, the median dot versus the entire constellation of dots? There's 19 people around that table, and, I think sometimes people want to, be reductionist, as opposed to like, wait, what's the breadth of thinking here?
Okay. Anna, it's a real pleasure to talk to you. I hope this is the beginning of a conversation over many years. Thanks for having me here. Congratulations on the new exhibit that you have here, and they should really bring their kids here to learn all about this.
Absolutely, yeah. We want people to come in and enjoy the exhibit and learn a little bit about all the mysterious things that the Fed
Anna
does.
Paulson, Philadelphia Federal Reserve President. From Philly, we go to Aspen. We are on the road here at Squawk Box this morning, Andrew.
Thanks, Steve. We are in Aspen this morning. Two former Treasury Secretaries, the co-chairs of the Aspen Economic Strategy Group. Hank Paulson is here, Tim Geithner is here, and there's so much to discuss. Just off the back of that conversation, which was about the Fed, and largely some of the questions about the regime change that Kevin Warsh is trying to put in place. You obviously had a place at the New York Fed, so you may have a view of, I think both of you will have a view about this, but what do you think about sort of some of the big shifts that Kevin's been talking about in terms of transparency, the communication strategy, and what that ultimately portends?
I think Kevin Warsh inherits a very strong institution, a very independent institution, probably one of the most credible, competent institutions in the pantheon of executive agencies, in a sense. And he inherits an economy which is going through some fundamental changes, hard to read. Inflation is a little higher than you would like, and AI, a bunch of other changes, the war, effect of the war, making it a little harder to read the underlying strength of the U.S. economy and what's happening. So he's got some things to work through. And of course, he's appointed by a president who's tried to fundamentally undermine the independence of the Fed. So he's, over time, going to find a way to earn his credibility, and you can only earn your credibility by things you do, and letting the market see how you act over time.
But how much of that is about what ultimately happens with interest rates and therefore the economy? That's the real show me story. But some of the sort of things that he'd like to do just to the to the institution itself, in terms of how important you think is to communicate. Part of that communication strategy came, by the way, after the financial crisis, with both of you were intimately in the middle of.
Well, let me say it's early days, right, for Kevin, and he's got the tools he needs. He's smart, he understands markets, understands fundamentals. The Fed, as Tim said, has got a lot of credibility. He's going to be judged not just by what he does early on, but by the perception of independence. Because I think that's really quite important today as we're piling on all kinds of federal debt. Because I think what history has shown is that that an independent Fed and the perception of independence is very important to the confidence in the U.S. markets, confidence in our treasuries, and so on. But in terms of making changes, I'm sure that any institution that's been around as long as the Fed, it's changes that are probably necessary. But a proud institution like the Fed is not easy to change.
How much pressure do you think he's going to be under from this president? I asked, by the way, Jay Powell is here, and you guys have lived under two presidents who talked to you. I don't know how much they talked to you, or if you ever felt any kind of pressure.
I felt no pressure, none. I had a president who said, we want to do the right thing, right? And we worked closely with Ben Bernanke. Tim, Ben, and I all worked closely together. So I can only imagine what that would be.
Yeah, I mean, the challenge for the president and for the head of the Fed is that because of this perception of a president wanting to undermine the independence of the Fed, he's going to have to earn that credibility by demonstrating to people.
So do you think
he should bend to that?
But do you think he should raise interest rates then?
He'll have to figure out what the right thing to do is. But the risk is for the economy is that they'll have to do more than otherwise would be necessary to earn that credibility. But you'll have to see. You'll have to see, because again, the economy is going through a set of fundamental changes, and I think it's okay to take a little time to sort of try to test the balance of those forces.
Okay, let me ask you a different question, which was we had the current Treasury Secretary on the show a little bit earlier today. We talked about Japan. We also talked about the Middle East. We'll go to both of those things. I'm curious about the situation with the bailout of the Japanese yen and what you think of that, whether you think it's a one-off, whether you think you have to do this multiple times, try to buy some time, try to get to some place where they can actually raise interest rates themselves. What do you think of this?
I mean, intervention in the exchange markets in the major currencies, it can play a role in some circumstances, but it only really works if it's a bridge to policy, or if it's working with the underlying direction of policy over time. And so, you know, Japan's in a place where the market perceives them likely to have to raise interest rates further. That'll help reinforce the objectives of this intervention in some sense. And if intervention is coordinated by the major powers, it could be more effective. So there's a chance this would be effective.
It's hard to defy economic gravity, as Tim says. You know, Secretary Bessent knows a lot about currencies. You know, he worked with George Soros when they went with the economic gravity, right? When they pushed the currency in a way in which the policy, you know, policy wasn't proper in France and in the UK, so they pushed it. Here, it's going the other way. And as Tim says, you know, there's the issue, there's the high debt level in Japan, the perception that they probably need to raise interest rates. So, but the thing I like to see is I like to see us working with a partner like Japan. And it's in our interest, right? It's in our interest and in their interest. We don't need them selling treasuries right now.
One of the things he also talked about was he believes that the Strait may open up, at least in the next couple of days. You're seeing the price of oil drop on the back of that news. Some of the equity markets move more positively. What do you think of that? And also, let me tell you, we had Peter Orszag here earlier, and he thought, and this is I was going to go to you, Hank, on China. He thought that this whole thing doesn't get resolved in the Middle East until China actively gets involved itself. I'm curious on all scores what you think of that.
Well, in terms of the Strait, listen, I think, you know, interesting thing about war, you can say what you want to see, but it's visible for the whole world to see, right? And so there's no doubt that the U.S. economy is held up, I think, really, really well in the face of what's going on in Iran. And I think we're better positioned to hold up well than any other country. But inflation is up now 1 percentage point. It's at a post-pandemic high, and it's either going to go up from where it is, or, you know, keep going up, or stabilize based upon, you know, what happens in the Strait. And so we'll have to wait and see. I don't have a position on what's going to happen in the Strait. And in terms of China, there's a lot we could talk about in China, but I don't think we're going to get a lot of help from China on solving this problem.
I agree with that.
You agree with that?
Yeah, I mean, I think, you know, we're in this state of there's no path to resolution in the Strait. Yeah, no clear path to resolution. And we might be in a period where it's a more permanent state of irresolution, of no clarity on it.
Right.
And the world was going to have to adjust to that, manage to that. And, you know, we don't know yet the measure of the magnitude of this shock still, because what's in the market is the expectation that this thing settles down to something that is a manageable shock for even all the major importers. Yeah. And that may be the case still, but it's a little early to judge that.
China, big question about what's going on in the economy in China, whether it's really as terrible as some say or it's a lot better. What do you think's really happening?
Well, it's a tale of two Chinas. You can make a mistake by either overestimating their strength or underestimating their strength. Now, on the negative side, it's sort of amazing when you look at there's zero foreign direct investment going to China. None. This is the second largest economy. And so you see a situation where capital wants to leave, and, you know, it looks in some ways like they're capital constrained. They're not putting money in private equity firms. I've talked with a couple of foreign companies that can't take money out. They're not allowed to take money out. And in some ways, it's, you know, they're doing very, very well in certain areas, but in some ways it's profitless prosperity because they're not making a lot of money there. But on the other side, you know, China is the second largest economy in the world. They make critically important infrastructure around the world. They're the leader by a long shot when it comes to EVs and solar panels. They're exporting, their exports will be like $1.5 trillion this year. So they've got no demand internally. The economy is quite weak, and so they're exporting. But they're the largest trading partner with countries with 70% of the global GDP. So I think what you're going to me, the key thing with China is I'm hoping that this stability and hoping and expecting that this stability will persist and will make some improvement in terms of the overall relationship.
That's the economic story. So President Xi Jinping is going to be coming to meet with the president in September.
Yeah.
AI is going to be on the agenda. Tariffs are going to be on the agenda. Taiwan is going to probably be on the agenda. I mean, how do you see this playing out right now?
I mean, I think both presidents are trying to feel their way to a way to coexist on terms that work, not just for both these two countries.
Can they work?
For the rest of the world. But they're going to have to find a way to work. Yeah. There's really no plausible alternative. And there's a level of pragmatism and recognition of that fundamental reality because both countries have realized that each has the capacity to hurt each other meaningfully. So there's really no alternative to that path. And we're in the early innings of a long effort for people trying to feel their way towards some way to coexist.
Tim and I have talked about it as being mutually assured economic disruption. Each side knows the other can hurt its economy. Neither can afford that, right? And so it's a period of stability. And both presidents are seeking stability. And, and I look at the meeting of the two presidents as being a very positive step. A very positive step.
Let me segue to the topic of AI by way of China, because there's a lot of questions here about jobs in the U.S., but there's an argument that these open weight models that are coming out of China, some people think some of it being stolen from the U.S., is the ultimate form of dumping here in the U.S. and is trying to break the sort of AI economy here in the U.S. And what do you think of that?
Well, I would say this. To me, what this moonshot release in China shows is there's a very real question about the extent to which AI should be open source and a public good, right? And so the U.S. is the leader, and we're investing billions and billions of dollars to develop AI, and the shareholders of the companies that are doing that are expecting a return. China seems to have a strategy that says, let's give it away, and let's also give away teaching countries how to use it. And I think they're playing the long game there because those companies that take Huawei chips and Chinese AI technology will probably buy the robotics, the other products that go along with it, and they'll be and they'll be part of that of that AI ecosystem. But to me, there's a couple different approaches. This isn't an easy question for the U.S. companies that are spending so much.
You've been through multiple cycles now, both of you. Does this end well? I mean, when you look at this AI boom, do you look at the economics of the boom right now and say, I see the path, or do you say, I see a problem?
I think that it's very early for people to figure out where is there going to be value, what's the return on investment going to be, how quickly is our economy going to figure out how to use this in a way that would raise productivity, how do you manage the deep risks that come with this. And I think we're going to go through for years a period like we've been through the last 18 months or so, where markets are going to periodically reassess and revalue what they think the future is going to be, and again, where that value is going to come.
But do you worry about, I mean, you guys lived through 2008. Is there too much leverage in this system, and are we looking at the leverage the right way, which is it classic leverage? Is it some of these circular deals? Do you think people understand the sort of scope of it?
Hank, you should speak to this. I think the U.S. economy today is in a pretty resilient, strong position to handle a periodic reassessment of what the returns on AI are going to be, and even periodic fading of optimism, enthusiasm, in the sense that the balance sheets of the American economy are pretty strong. Fiscal position is worse than it's been, and the financial sector too is in a relatively strong position. So I think we're in a pretty good position as a country to handle this inevitable rolling reassessment of where value is going to come from and what the return on capital is going to be.
Yeah, so I agree with that. First of all, our economy has been incredibly resilient when you look at what we've gone through. We're the bright spot in the world. Now, in terms of AI and circularity, I would say this. First of all, on the positive side, the big hyperscalers, the big technology firms, I don't worry about leverage there. They've got huge cash flows, so they're going to be fine. But what you see, the circularity you're talking about is sort of we've been investing, right? The suppliers of chips and compute, making investments in the customers, so they've got the capacity to buy, and customers that need the chips making investments in some of the suppliers to make sure they've got them. And so there's nothing particularly nefarious about that, but there's no transparency. And so if and when a correction comes, it's going to hit some. The risks are not going to be split evenly. It's not going to come at an optimum time.
A correction will come. Right? Yeah. We know it'll come. The question for all of us is, what's the risk that correction snowballs into something more damaging?
Yeah.
And I think those risks are pretty modest today.
Yeah.
We're gonna have to run just jobs, just AI and jobs. We got 30 seconds. Are you in the Jeff Bezos camp all morning, which is we're gonna have lots of jobs as a function of AI, or are you in the Dario Amodei camp?
I'm in.
It's 50% are gone.
I'm in neither. First of all, there are going to be a lot of new jobs in data centers and all sorts of things, but I'm in the camp that says, boy, in terms of white collar workers, okay, there's going to be a lot of displacement, and it's going to happen so quickly. One of the things that we as a government need to focus on, and one of the things we're going to delve into here today and tomorrow, is what kinds of plans do we need to put in place so when the jobs are lost, that we've got programs to deal with these people.
Right. We got to leave it there because we got to hand it over. I want to thank you both, and good luck over the next 2 days. We'll see you in a little bit. Thanks.
Thank you.
That does it for us here in Aspen. Make sure you join us tomorrow. Squawk on the Street begins right now.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Coming off record highs for the Dow, S&P is going to take aim at one of its own at the open as August continues to kick off strong. Results are solid at names like Palantir and Cat. SpaceX on deck. WTI 76.58 this morning, lowest since July 13, as Secretary Besson on Squawk says a deal for freedom of movement in the Strait is possible, in his words, today or tomorrow. Our roadmap begins with earnings in the AI trade. Caterpillar surging on a blowout quarter, helped by data center demand.
Shows the Palantir also getting an AI boost as well. That stock up double digits after the company raised its full-year outlook and posted quarterly revenue that was almost double what it was a year ago. We've got an exclusive as well with Wells Fargo's Chairman and CEO, Charlie Scharf. We're going to talk about, of course, Wells Fargo's growth strategy, his outlook for the economy, and a lot more. That's coming up in a few minutes.
Let's begin with the markets, though. Dow's poised to extend its record run, thanks in part to Caterpillar, surging on its quarterly beat. Jim, what a story there in construction, up 35%. Revenue, $20 billion for the first time in a quarter.
I mean, the turbine business, turbine using the G term, turbine, I have to tell you, the Caterpillar that I'm looking at, left, by the way, I mean, we got to be really, let's give Jim Umpleby his due. I think a lot about Joe Creed, the new CEO, but Umpleby set this company up to be the data center company. And David, you can string their turbines together, you can string some of their engines together, and you know what? You can just generate as much wattage as you want. And I think that you put their machines next to the Marcellus Shale with a pipe, solution.
It's a solution.
Power and Energy, what a group. Remember, these are all those new.
How much power and energy has grown as a percentage of the overall revenues?
Oh,
I mean, enormously,
yeah.
I would assume.
Oh my God! Well, it didn't even exist a few years ago.
Right.
Although that's a print that was kind of just in line, Jim, on power and energy.
Right. Well, look, I mean, I do think that you got higher sales volume in construction industries. You also have higher sales volume. You have kind of higher sales volume in everything.
Yeah, I mean, nice tariff refund in the quarter.
Resources,
Dealer inventories, Jim, are elevating.
Right, no, that's not good.
I know.
There'll be people, remember, Bear downgraded it, and it's going to be on dealer inventories. But I look at Caterpillar, and I just think, having met with Creed, that if you're a creative person, and you have hedge funds that are buying stuff and hooking it up to the Marcellus Shale, that's creative.
Yeah, they're a beneficiary of that. We talked with Mike Worth, of course, about that plan. Remember, down in, again, that area, the Permian.
That was
Chevron
GE.
and
That was GE
Microsoft, GE Vernova, the beneficiary there, but not dissimilar from the same kinds of things we're talking about here, where, again, they can get the natural gas, take it and power power the machines that, or fuel the machines that power the future data centers that will be built.
Well, you know, Morgan Stanley put out pieces like 1 point, you know, we're talking about more than a couple, you know, more than $1 trillion being put to work. I want to just step back for a second, and I just want to say, 1.2 trillion, 30% year-over-year growth and spend. Carl, this is one of the most exciting moments I've ever been in business. Now, if you strip away the idea that there's going to be regulation that could slow this down, we have this versus China, which a lot of people talk about. We have this with our incredible resources. We have this with the idea that we can be the data center king. We have this plus Palantir. I mean, look, Hannah like them. Oh my, they put on a show, and their rule of 40, you know, 155. They have a lot of business, and it's joyous. I found it joyous to hear them.
Did you think it was otherworldly, in their words?
It's pretty, the U.S. business is up that much.
Yeah, I mean, U.S. it's now 81% of their total revenue.
It's hard to do to have those kinds of numbers, and it's not just the government. And look, as we all imagine ourselves as, I think, as patriots, including the people who he decides is not patriots, the people who are in Ivory Tower, Silicon Valley, who eat vegetables. Now that was a new one. The vegetables. They eat vegetables. I mean,
you need to explain what you're talking about to people.
Oh, okay. So Karp is talking at
The
one
CEO
point.
of
He's
Palantir.
attacking. I thought he was attacking. I mean, no, he didn't identify them, so I don't want to put words in his mouth. The people who say he's attacking Dario
He's
and
attacking Anthropic and OpenAI. I think that's pretty common.
But this is theater, man.
But you didn't explain the vegetables.
Well, he says that they're vegetable eaters.
They're vegetable eaters.
But it's theater. But I agree with him. I mean, like, he's making these points about U.S. and
Well, what he's really saying, though, Jim, is he's saying that open source is the way you've got to go. And that if you're an enterprise, you don't want to be sharing any of your data, even though Anthropic says they don't necessarily take it. They can, in certain ways, understand. He's talking all about sovereignty, the sovereignty of the company, the sovereignty of its data. And he is very much in favor of open source. When you start talking about this competition with China, which has the best open source models out there, then you're introducing, and regulation, then you're questioning whether or not the U.S. government is going to somehow crack down on, by the way, what Karp is saying we need, because he's telling enterprises, we can help you build on top of the open source layer. We can give you what you need using your own proprietary data to actually create real economic growth at your company in a way that you should not allow Anthropic or OpenAI to do it, because ultimately they will benefit more than you will.
Who's his partner? NVIDIA.
NVIDIA has an open source model.
Yes, NVIDIA is
Nematron.
the leader of the open source movement.
Yes, they are. That
Because
is right. But the real leader is China.
Well, okay, if you keep the servers here, you're fine. I wish that Jensen had said that in his Jensen
Around the world, it may not be that we can do it here. So yes, we do have NVIDIA's model. You got Reflection AI, private company. I've talked to the CEO here once, Michel Laskin, about that. There's any number of other potential.
I agree with that.
Yeah.
Okay.
But this is a real battle.
Right, but I think, and that's why I was saying to Carl, on my NVIDIA pen, this is like you wake up and you say, wow, we are really clashing. And I hope that, does anyone be looking at the glass piece? The Trump draft ban on Chinese?
But that's not what we're talking about now.
No, but this is against China. I'm saying he's going to see Xi soon. The Chinese, all the glass companies, Coherent, Lumentum, Marvell, up big. These are what I'm seeing is companies back up. It's not often that we have companies up 30 and 40 every day.
No, Red, this is a separate story involving
Well, no, I'm
a
talking
story
about
that says the Trump administration is drafting a ban on Chinese data center devices. I understand, but
I'm talking about point gains. I'm talking about people at home. What's the matter?
Nothing, I'm trying to follow you.
Right, I'm talking about people at home coming in, and they may own Coherent, and they find themselves so much richer. Momentum was on Mad Money. They said, look, the world's our oyster. Oh, I'll take 97 points. Micron's probably up. I would put Micron probably up 60 right now.
It's a good morning from memory.
Palantir is, is it up 8, then up 12, then up 15, then goes up 20 in the overnight market. And I just say to myself, people who are watching are making fortunes. And that's what it's about. It's not necessarily about, look, I'm not a foreign policy expert, but I'm trying to make people fortunes.
Oh, I know. I mean, but remember a week ago you were very cautious on a lot of data center related things.
Well, no, then Amazon spoke, okay?
And then Bezos sold.
Line of sight.
Oh yeah, and then Bezos sold $4 billion worth of stock, which is nothing for
He
him.
took advantage of that. And look, he has every right to sell stock.
He can do whatever he wants.
He
He's got to fund. He's got to fund Blue Origin. He's got to fund
look,
Prometheus.
You know that Chevron deal? That Chevron deal?
The Microsoft one that we were referring
yeah,
to.
they got 12 CAT engines. The G.
I know CAT is a part of that deal.
That's better than a Grady White, 32-foot Grady White.
I knew that was a part of that deal. That's why I mentioned that.
He didn't get the Grady White.
CAT remains the second best
I
down
don't
name
even
of
know
the
who
year.
Grady White is, no.
When we come back, an exclusive with Wells Fargo's Charlie Scharf right here, Post 9. Don't go anywhere.
Overlooked, but the financials were one of the best performers this quarter behind just energy, of course. Although I think energy is going to get slaughtered here. Strong reports from the big banks, including those from our next guest. Here on set, for a CBC exclusive is Wells Fargo Chairman and CEO Charlie Scharf. Charlie, welcome to the show.
Thanks for having me here. It's great.
All right, so there is news here. You're offering tokenized deposits, and I want to know what competitive edge does this give you, or are you just trying to get ahead of customer demand? I know that JP Morgan has talked about it. You're ready.
Yeah, listen, I think when you look at all the banks, we all recognize that tokenization and blockchain technology is real. We've been saying that for a long time. You know, you've got those outside the banking space saying they're the only ones doing it, the banks don't get it, and that's just not true. We're all embracing it, we're all building solutions. This is an example of what we're going to be doing to allow our customers to move money more freely, to settle real time, operate 24/7, starting in the fall and then expanding into 27. We're doing it ourselves, but we're also very excited about working with other banks and just having it be a better way for our wholesale customers to move money.
Are they asking for it? Are you going to sell it to them? Are you going to pick up business because of this?
I don't, you know, they're asking about it because they're curious about it. Okay. They're not asking about it because they think there's a huge benefit to them yet. And that's on us to show them that it's beneficial. Okay, speaking of showing something is beneficial, when I go over the conference call, there were so many of the earnings call, so many questions about net interest margin. They didn't listen to you. You were trying to grow the bank. Yes, that's actually dilutive to net interest margin. But the growth of the bank, beyond just being a plain vanilla commercial bank, is the future. Could you lay out to our viewers why your view is right and the minuscule Picayune view of the analyst is wrong? Well, I would say, first of all, I do want to say, like, we care about what everyone thinks. But it's on us to explain what our strategy is. And what we're focused on is growing revenues at the company over a sustainable period of time and growing returns. And NIM is more of a byproduct of that. And the fact is, we've been so constrained for so long, we were able to go add a bunch of assets in our markets business, which has lower NIM, but still has very high returns and will bring additional business. Now, that's not going to go on forever. We understand that the world is concerned about NIM, so that's something we're going to be very focused on. But our laser focus has been, since we got to the company, at creating an entity which grows faster and has higher returns. And that's what we've delivered, and we're going to continue to deliver that and hopefully tamp down the concerns about NIM.
One last question before I turn it over to my colleagues. Since the cap was removed on June 3rd of last year, Wells' stock is up 14%, Citi up 74%, Bank of America up 39%, JP Morgan up 33%. What are we missing that your bank is the worst of the megas?
First of all, I think, you know, when you look at stocks, you as well as I know, the day you start the clock has a huge difference. We've performed extremely well since probably, I mean, I got to the company in 19, so if you look at it since probably 2021, the stock has done unbelievably well. And ultimately, what's going to matter is our performance. And when you look at our results, our earnings per share up 25%. We have revenue growth really strong. Expenses up 2%, but only because commissions expenses are up. So expenses really controlled. We're growing loans, we're growing deposits, we're growing bankers, we're growing traders. We're taking market share in investment banking. Our markets revenues up 24%. Our banking revenues up 20%. So, you know, over a period of time, those are the things that drive the stock price. And, you know, you're either going to increase the value of the stock by increasing the earnings or the PE. We're working on increasing the earnings, and we believe the PE will grow as our growth grows and our returns grow. And the market will reward that over a period of time. And so we feel really great about the prospects, as great as we have felt consistently since we've been on this journey of putting our issues behind us.
Well, you mentioned investment banking. Let me sort of start there or come back to that as well, because you did hit a new record in terms of fees. Obviously, a lot of the large banks had very strong quarters when it came to that. I'm just curious, is it a new baseline in terms of your activity in the capital markets and M&A advisory, or is it a cyclical peak in your opinion?
Well, I think when I separate out the industry versus us, there's no question that rising tides lift all ships. Everyone participates in that, but the tides do go out at some point. And the things that we're seeing in our business are core relationships. We're doing deals for our middle market customers. We're doing business for large corporate customers that we've had strong relationships for a long period of time. So we believe when the markets aren't as exuberant as they are today, we'll be impacted, but hopefully less than others, because we're building an underlying franchise. And so that's what everything is that we're doing. If someone's just looking for a trade in tomorrow's equity volatility or tomorrow's investment banking IPOs, that's not us. If you're looking for a bank that's going to grow consistently over a longer period of time and produce superior returns, those are the investors that we want to attract, and we've got a high degree of confidence that that's what we can get to.
Yeah. Troy, let me just take a get your broader view for a moment, because we are in a unique time, it would seem, for the capital markets, for the economy overall. These CapEx numbers are the likes of which those of us who've been in this business, or certainly for a long time, have never seen anything like it. Companies that were once amongst the most profitable now are actually going negative cash flow to fund what they see as the need. How do you view it? And is there risk building overall in terms of all of that spending going towards something with an uncertain return?
Yeah. Listen, I think it's both sides of the conversation are right. There is incredible importance to do this. There will be significant payoffs, but there's also a huge amount of risk being taken because everyone's piling into it. Not everything's structured the same. Not everyone has the revenue model that's going to support this. Understanding who the winners and losers are incredibly difficult. What we work really hard to do is not just picking the winners and losers, but within the structures of the transactions we lend to, make sure that we are supported by people that we believe have revenue models who can pay us back. So I think this is one that's going to take a long time to support out. It is real. The benefits are real. It takes a lot of money to invest in it. There is a payoff at the end, but looking back at what happened in the dot-com era is...
well, on the call you made a distinction about lending to a chip maker, I guess, that has 80% margins, as opposed to, I think, someone else in the supply chain is going to take, these are your words, 15 years to get paid back.
Someone who's going to take 15 years to get paid back is taking a very different credit decision. They're getting paid a lot more for it. And so there's some very smart people out there that know how to underwrite these things. Others not as much, and there's a lot of money piling into this. We're trying to stick to what we know, which is where we have line of sight to strong companies that we want to support, that will pay us off, and then we'll be there to help them the next time.
You said the benefits are real, and sounds like you're speaking from experience. Is the ROI picture filling in for you?
Totally. It's remarkable, actually. Quarter by quarter, when we go through our results in terms of what we're projecting to use for AI, the benefits that we're going to get are hugely substantial. I mean, our head count since I've been at the company is down 79,000 people. We're down 15,000 over the past year, 7,500 over the last quarter. And that has nothing to do with AI. Now, we still think we've got benefits of just running the company better, but when we think about the ability to automate roles and to perform those roles in a way that produce better answers for the people who work at Wells and for our customers, it's going to result in tens of thousands of less positions. Now, yes, there are other places where we want to grow, where we can apply that. My concern is that this isn't just for Wells, this is a broader issue, is I do believe that this is a great thing for the economy, but the time periods might not match up, the skill levels might not match up, and so we all have to work really hard in private industry and with government to figure out how we're going to bridge that gap. But there's no doubt, I think, we're going to be huge beneficiaries of AI, and our clients will be huge beneficiaries.
Do you have a view as to how great the disruption might be, even if it's short term?
I think it's hard to tell. And I think the benefit we've got going into this is just when you look at it, consumers are really strong. Jobs are there. Wage growth is higher than inflation. I heard Secretary Besson earlier talking about the K-shaped economy is no longer real. The data that we see totally supports what he says. Totally supports what he says. When we look at our debit card and credit card spend, our credit card spend is up 10%, our debit card spend is up 7%. Our credit card spend is not just the affluent customers. Affluent, mass affluent, and mass market, each are driving about a third of the spend. On the debit card spend, about 70% of the increase in spend is from the mass customers. So everyone is spending more, delinquencies are down, savings rates are up, times are pretty, now yes, consumer confidence should be a message for all of us.
We got a savings rate number last week. What, in the twos, hasn't been much lower in decades, and you don't have a problem with that. It's not what you're seeing.
No, what we see is, as I said, savings, deposits, delinquencies coming down, payments going up. People are concerned, but now they've had tax refunds, which have been a huge benefit. But again, I come back to, they have jobs, and what we see in the data, because we look at average direct deposit paychecks rising faster than inflation for our customer base.
Okay, so Charlie, the main reason we have a big position for you since the 30s, because everything you said is true, you bought back a lot of stock, is the reinvention of the bank. I see the people you're hiring, and I say these are top flight people. These are people who can move you up in the tables. These are people who can get you M&A, they can get you IPOs. Is it working?
100%. When you look at our businesses, and we tried to put this in our earnings release, every one of our businesses are growing because we're investing in them. Our
That's
card
not
business,
true.
Our consumer banking
Investing.
checking accounts.
Well,
We got
CapEx is
from number
horrible.
9 to number 4 in announced U.S. M&A this past quarter. We picked up 78 basis points of equity capital markets market share. We're growing commercial banking.
People have no
These are the
clue.
things that actually build a franchise. We're not just riding the wave of the markets.
But some people came out of your call.
So again, I'm going to keep repeating myself 1,000 times. When these guys were totally bearish, I was totally bullish. They wanted to search and try to find anything to bring this market down. I mean, everything. I've never seen anything like it in the 22 years I've traded. What's gone on with these idiots in the past 2? They've been proven wrong over and over, and they're still telling you that the economy is not in good shape when the numbers are saying different. You got to spend to make money. So I had this buffer, and I had the buffer to peel the seal off the floors. So I went out and bought me a scrubber that did it all. And I could just run through that thing just pushing like a lawnmower, and all that other work is gone. But I had to invest $3,000 to make my job 3 times easier, 5 times easier, and 5 times more efficient. And I had that thing paid off in less than a year. So we're popping out of here right at open. I'm wondering why these candles are so small now. Doesn't seem like the way they used to look. Let me go to... There ought to be something in here about font. Appearance. Line width. I wonder if that Doji Phil. Gotta be something. Yeah, I can't find it. Just weird. I don't know if it's me or... Oh, that's too... I ain't gonna like that. Better. Oh, I bet you I go to the main thing. Well, I ain't got time to mess with it now. I have to deal with this. Popping up. Missed our opportunity. Now it's breaking out again. Meta. We're breaking the 200 on a lot of these. Microsoft, they're firing up on again, all cylinders. Google's breaking out, 3 white soldiers. Meta's the only one that really hasn't done it yet. IWM hit resistance. Got an alert. Walmart. Get my charts up. Kind of set this up different. Mr. just now hit resistance. Google's, that's on the 5 minute. 2 minute. Two minute. And a 2 minute. Today's, we've got AVGO and CAT. CAT had good earnings. Red ones today to watch. Amazon, Meta, Google, announcement is expected regarding, they said 1 or 2 days. Okay, here we go. CrowdStrike up, PLTR up again. I called out PLTR yesterday. Tesla got a triple top, broke a little bit. CRM's moving. CRM. /ES got a good high to it. What am I wanting here? Amazon. I gotta go out and get me a mouse, make my job easier. Okay, we're back at support. Oh, what the hell? Oh, I can't change that VWAP. Okay. Tesla has 3 black crows on the 1 minute. Meta moving up off the 200, triple top. Okay, let's see here. We've got the mustard. We're going to see if we break out of this resistance here. SPX at resistance. So resistance is right at 7644 on the 5 minute. The 7660. Dang, there it goes. 3 white soldiers on the /ES. Oh, there's a bunch of lesbians. How didn't lesbians pop up on my screen? Three white soldiers consolidate. It wants to break out. It's kind of an ascending triangle in a way. Meta. We got 3 white soldiers on /ES. We still ain't, there's been what? 1, 2, 3, 4, 5, 6, 7, 14, 13 minutes. It's going to break soon, I think. We listen, we don't judge. You flap to what you want, bud. What's that? We listen, we don't judge. You flap to what you want, bud. Was somebody saying something? He's back! All right! Welcome back. Be careful on your spy puts. Oh, it was my response to Lesbos. I love lesbians. You ever made love to 2 lesbians before? I have. And they were fine. SPX broke out. Jimmy called it. $7 to $7.90 to $7.80 cash. Good job on Apple. NVIDIA popped up a little bit here. Kind of a rising wedge on the 2-minute. Now what was this? NVIDIA. NVIDIA. It's definitely looking bearish right now. Meta's pulling back. Didn't want to break it yet. SPY's pulling back. We had three white soldiers on the 5-minute, on the 2-minute. Oh, I'm going to see what them calls were. What I have them at. I can't remember. $77, $60s, okay. SPY, the SPYs are cheap. Where's their SPY at? Although today's lesbians are a lot different than they were in the 70s. I will admit that. Real nice setup on Apple, Johnny. That was a real nice setup. That was a good intro. That was a good idea right there. Taking that trade. Yeah, that was a good one. The SPY calls are up 20 cents. Right off the 10. What'd I leave? Three white soldiers, scale out some. They're at 144, the 763s. Now these things, we're bullish in anticipation that there's going to be some kind of deal with these terrorists. Tesla's pulled back to the orb. Tesla's pulled back to the orb. Apple hit my resistance. Apple's hit my resistance. This was a beautiful trade. I mean, that was sweet. The video. IWM resistance to break is going to be 298.39, 40, 298.40. And they were boasting about Microsoft as a fat cat trade yesterday. SPX just broke out with another 3 white soldiers on the 2-minute. Mr. pulled back to the 200. Google's breaking out. New high. Okay, we're pulling back on Apple here. What's going on here? Throw one of these over here. Let's see which one. The video one. AMD at the 200 right here. On the 2-minute. Man, them suckers are high. They're very high. I can't trade that. I ain't spend $2,000 on a frickin' trade. Amazon down 738. We got a symmetrical flag. We got a double bottom. Amazon, AMZN, be 280 strike. Still watching Amazon here. Turn that air off. They just put a new one in last year. The damn thing's rattling again. SPX is breaking out again with 3 more soldiers. And we're way above the 9, so the 10. So it's been respecting the 10. shoot, I was going to give that to.
That could help the overall market.
Meta's moving. I mean, Google, Microsoft, Amazon's getting ready to try to break the 200 right here. Okay, we've 10 minutes of engulfing candles, parabolic run on the SPY. Like see a pullback. We're getting back to that. No, oh, let me see here. I got the 50 on here, but let's change this. AMD is back to the 20 right here. NVIDIA's set up. We're at support. Apple just broke resistance. Watch NVIDIA here with these three black crows. Meta's pulling back to the 200. Microsoft new high. Google new high. Now it's a good setup on Google there. And that called that Amazon out. Now Meta's getting ready. I'm going to see if I can. They're probably still CapExing on freaking out on Meta. It's 2 minutes. They're a little hard to get used to compared to the 1 minute. They're so plain Jane. SPX is hovering at resistance for 8 minutes. Just gone sideways. Those are spies I had earlier. There we go, rooking out a little bit here. It's not as steep as it was yesterday. The run. Yesterday's run had me lost. Amazon breaking out again. Tape's still showing buys. We're at 765. Nice looking chart. 3 white soldiers, 3 white soldiers, 5 white soldiers, 3 white soldiers. Big old buy signal and SPY. Put it on the 5-minute. Walk away. NVIDIA can't make up its mind. Apple can. Set an alert right here. Try to catch this SPY again. I need to take a drink of water. Make some turmeric. I'll make some turmeric tea. Let that go down first. Turmeric. Damn, intervals of 5 minutes. 10-minute runs. Okay, here we go. Now. Are we going to hold this? Miranda? Triggered. We got 763.85 to 20. Now we're below the 10. Is anything in the news? 764 is what I got my eye on. Got a doji. SPX is under, SPX is under, that's 1 minute. Now look at the 2. Okay, get ready. If this doesn't hold, I'm going to stop out. Or let's look at the SPX. Yeah, wait. SPX would be the 76.75s. One. Volume's kind of slowed down. They're thinking about it. Damn it. Shit. Man. For some reason, I had the 9 simple moving average on that one. Tesla bounced earlier off that double bottom I called. To a head and shoulders and pulled back a little bit, trying to break out again. Here we go back down here on a SPX. I'm a spy. I want to look at SPX. Coming back down to the 20 here. Not holding the 9 on the slash ES. Well, I'd really like that 60, 76, 75 would be sweet. Right here is where, if you think you trust the 20. On the 2 minute. What? Fuck, I was freaking out there for a second. What the hell is that? Oh, I got it. Okay, I'm up 20%. I'm gonna go ahead and sell them here. Where's it at? Ah! Now watch this sucker break out on me. Ouch. No, they're gonna break out. $10.90. Fuck. Well, it's all right. I got 10.70. They're at 11.20. That was a nice setup, using that their new strategy. I got the /ES over here on my regular time frames, and I might add my other moving averages on here. just to watch them. I can watch the new strategy work out. See, you got the 10 closing in on the 20, and this would, you know, if you were above that, this would be a buy signal, maybe. But we've had a good run. We're close to a double top on the /ES. Now we've got a upside down dragonfly. And these are 1190. Ugh. Are we going to dip or are we going to hold on /ES? I'm going to start. Oh, I got broccoli. I got to put in the fridge. Who recycles their plastic bags? I want to know. If I must. We're going to open up Straits of Hormuz. And then we're going to rebuild the country. I wish they'd blow up all that island and redo everything on it. Just blow it all up. Put a little more fear in them. But maybe it'd be a stupid thing to do. But I want peace. I'm already feeling at ease, but who knows, in a couple of years we'll get nuked. Well, I'm proud of that trade. Proud of two of them today. Should have got a couple more. That'd been $600 deal. Off to a rocky start. I've got a challenge. I started a challenge for myself. That's why I'm showing the numbers. I want to see how good this strategy is, so I decided to start a challenge. First day was suck ass. I about got back in them things again. But we're up here to double top. We did break the high on the /ES on the wick. AMD's pulled under the support level. Kissing the 10 is kissing the 20. NVIDIA, we're under the 20. We're right on top of my support on Apple. So what was resistance is now support, Apple. I'm going to give that to Vegas here. What was resistance is now support. Shit. I could have had another couple hundred there. Apple, they're at support. If it fails this, Randy, man, I'd had $600 on that frickin' SPX trade. We broke resistance, new high. Okay, should I jump it in here? I think wait for the 10. We got a doji on /ES. We got real thin candle here. See this right here? You see where the 10 touches the 20 and how it bounced up? How tight that's called a squeeze. You want to be using that 10 SMA. That would have been the entry right there. So we got to wait for that. Now this, if this starts to spread out, that means we'll spread out here. It's kept an equilibrium all the way up for the last 10 minutes between the 10 and then we had that breakout. So if that pulls back to the bottom of that candle, right about there, you're really going to have to learn how, I think, study candles real strong here with this strategy. It'll be a real big benefit. We had a dragonfly doji right there. And this, I don't know what that is. It's a doji of some sort. Okay, Tesla's at resistance, the 200 EMA. snake breakout, pulled back, boom, then another snake breakout, pulled back into an ascending triangle on the 1 minute.
I thought I would be rich, but I'm so stupid. I got $20,000 in the head. If I can do it, you can do it too.
I don't want to do it. You ever have somebody try to tell you to do something wrong and I don't want to do it? The Caterpillar stock gives Dow 200-point boost as data center demands drives record revenue. Well, AI is paying off. That's what these idiots on here, they talk about profit fundamentals. AI is going to bring a bunch of good yeah. I wish I was 20. I'd be using AI to help me start a business. Soon AI is going to be picking stocks for you, just like the calculator did to our children in high school. I'm just watching this thing stagnant again. It's the same thing as yesterday. I'm so stupid about yesterday. I'm going to, as good as I am, and miss that. Real annoying. Yeah, I just called Apple off support. Figaro, oh, ghost riders in the sky. SPX is coming down. I'm going to do the same thing I did last time. Actually, we got a support right here. So this would be, if we were bullish, this would be the spot to take it right now. If we were bullish, and we are, but I mean, that's $60 right there. So I'm going to drop this down and just wait. Dadgummit. At 120 could have sold it for 120 a contract. Get ready again. PLTR, that's a monster. Okay. I think we're getting ready to squeeze again. And I'm going to go get my lunch ready again today. And yesterday was really a miserable day for me, mentally. And I can't emphasize that I should have just got away from the computer once I started having malfunctions, technical difficulties, because I'm a very emotional kind of person, and I can't just shrug it off like most people can. Then messing with my watch, putting a scar on my hand, and then that damn telephone call. All just within 10 minutes. That threw me off the rest of the day. I could just sit there, watch it go up. There it goes. It's like Jimmy said. Dadgum, man. That's like $500 extra on the table. I'm trading in the money. I'm trading this whole strategy different under this here new strategy of mine. I want to start banking. I mean big bucks, 10, 15, 1,000 a day. I had a chance to get that one there cheaper. So I added the 9 EMA on here. I don't think it makes much difference than the 20 SMA. A little tighter, but not much. The 20 kind of saved me. If I was in this trade, would have saved me. Maybe if I'd have been in the 9 EMA, I would have probably, maybe, that's a hammer, I'd probably stayed in, but I would have thought about getting out of the trade. Here I would have not. I would have held on confidently on the 2 minute using the 20 SMA. And as the band started to once it started to widen and start to shrink, it really didn't affect it that much until it got to right about here. And then it never did cross over, and that's where I added on. Where'd I buy it at? $9.30. So I bought it here. That was a good spot. I did real good. The problem is I should have held. Now these things are at 1850. Fuck. So are we understanding it a little bit better? These are at 1820 now. I'm up 100. I would have been up 100%. I'm going to take the 9 off of here. I'm going to stick with the 20 as support and not worry about the 9. Fuck. $20. Now I just got to learn how to stay in it. But I got out at that triple. Hello?
Hi, my name is Diana. I'm reaching out because we pulled up your Medicare profile, and there's a note here showing your 2026 plan update hasn't been confirmed yet. We just need a quick confirmation from you so your coverage doesn't get interrupted. Just confirm for me. Do you have both Part A and Part B?
Did you know I was gay?
Sorry. Are you enrolled in Medicare Part A and B?
Did you know I was gay?
Can you please confirm? Do you have Medicare Parts A and B so I can check your added benefit?
You don't care, do you?
Thanks for your...
Magnificent? Say something. Jim, you're only belittling yourself by answering them calls like that. You need to be more professional if you're going to be the member of this room or a monitor. And I understand. She was a robot. Robots are programmed to receive. Can you believe this? I'm rather disappointed right now. These things are at 2,200. Jeez. Jim, do you know how much money you just left on the table? Yeah. But I'm learning my new strategy. So, and you can do this on Randy. You can use these moving averages on swing trades, setups, weekly and daily and hourly in your 4 hour. The same moving averages, simple moving averages work better even probably if you're looking at a bigger time frame. Just a suggestion. But shoot, I'm in the same predicament I was yesterday. I'm watching this thing go up, and I was in it. Them other calls, I'd have $25,000. The spies. The 758s are now at, god damn, 10 times $900. It's $9,000. And what happens when we get the news? You know, is it going to Now, these idiots on CNBC and Schwab said that the interest hikes were baked in the market. So I don't know what the percentage of them people were, and they were bringing it up again this morning and I like, back in the day, they didn't have a Janet Yellen, and they didn't have, I can't remember that, it's such a thorn in my side, that last one that was in there. He had everything wrong. He was not forward looking. Sometimes he was saying, the less you talk, the better off you are. So it's going to be a whole new kind of game. The market's not going to rely so much on the Fed like they have been. Not Bernanke. I like Bernanke, but Greenspan I liked. But keeping the interest rates too low and then keeping them too high. For years they kept them too low. When the so-called politicians were saying that the economy was in the best shape ever. It was really stupid. $68.85s or the 60. I want to try to keep above the money, but these are starting to get a little expensive. So I'm going to raise my alert above the 20. And I'm going to go start my lunch. Now we could trigger off this one too, so I'm going to set another alert right here. Off body, between these two bodies. As you're learning this strategy, I want you to keep studying we're in the 2 minute. We're going to stay in the 2 minute all week. I'm learning this too. If I'd bought 2 or 3 of these, I'd be up $4,000 right now. I've been buying at the market and selling at the market in the challenge. I'll be right back. Let me put on a song real fast. Nah, I'm going to be working with less noise. Some people like to talk too much.
Some people don't talk at all. I'm gonna cut out the noise and work harder, 'cause I got a challenge, my new trade strategy. Well, the SPX just had a new high. I'm going in the kitchen, cook up some grub. Some people, they talk a little too much, and some people don't talk at all. This SPX just had a new high. I think I'll go in the kitchen and cry. Some people, they just talk too much. Some people don't talk at all. Fuck. Missed it again.
Did you like my talk too much song? Did you like my... My charting is the greatest. Everybody give me a high five on there, on YouTube. Give me some love. Let me see them hearts bouncing. Because I'm getting ready to go cook me some chicken. Okay. Jim, we understand that you are gay. I'm going to be nice this time. Hello, may I help you?
Hello?
Yeah. Is this Roseanne?
Hi, this is Samara with the
Oh,
Mortgage
Samara.
Protection Department.
Oh.
How are you doing today?
I'm doing great, baby. I just made $4,000 in a trade and made another 200 and something in
the
another.
reason for my call is that we're providing information about Mortgage Protection Department, which is designed to help protect your family and home by helping cover mortgage payment or pay off the remaining balance in the event of death,
You just-
disability, or a qualifying critical illness.
You just had to mention family, didn't you?
Confirm, do you have active mortgage on your property?
Nope, it's paid off, baby. Are you there? Did I scare you? Yeah, I paid it off. 30 acres. You want to buy it? No. Good. Damn. New height. Randy, this is bad. Oh my gosh. Oh gosh. It's going to get better and better though. I think this new strategy will definitely keep me in the trade longer. I just was up more than I'm used to on what it is. Okay. Oh shit, I hate watching these go up and I'm not in them. That'd have been $300-400 right there. That trade. If I'd have took that right there. Or right here. That's just one red candle. I mean, this ain't messing around. And the ones I had before, I don't even want to talk about. They're at $26.50. And then the spies. I don't even want to look at them either. Oh. I got ants in my pants. I think something else has happened here too. Last 2 days I've been experimenting on my legs. I don't know if you... I'm going to show YouTube my sexy legs. Girls, don't faint. Whatever you do. You're going to get a free shot here, Aringa. Don't get excited. I got me some compression socks on. And I can already feel the difference and the energy that I'm getting in my body from shooting that blood back up to my heart. Hollow socks. Big difference. I felt it this morning. I've only had them on, this is my second day. I told them I wasn't going to advertise for them because they pissed me off. They put right when I bought these, I waited a year to buy these socks. Thought about it, and thought about it. So I finally had the courage to buy them. And then the next day, they were giving away a free hat. I said, what's my luck? If I just waited one more day. Still going. This is unbelievable. Meta. He's talking about Meta. Oh, Meta's at a resistance.
Starting to turn around. We also broke through our downward sloping trend line on our RSI indicator, our momentum indicator. We are still a bit short of that 50 midline here, so that would be another bullish development if we were to close above that. Finally, our volume profile shows the point of control, the heaviest area of all. Our thick red line here comes in near 606, so that area roughly about 600 to 615 would be a notable potential.
Yesterday I called a 50% pullback on that run. 50% pullback on the run. Bull flag, breakout, pullback. Randy. Fuck. 1870 for them calls. That's another 100%er. Almost $3,000 for them ones I got in earlier. Oh, this is beautiful. Yesterday was this last week was beautiful. Okay, I'm going to talk about this one more time. I mentioned it 3 weeks ago. The 200 SMA, the 200 EMA. When you want to swing a stock, when you want to buy the lowest possible entry, when you want to get ahead of the game, because these people ain't telling you anymore. Nobody's telling you this but me. And I've told you it 3 separate times, in 2022 and twice under Trump. is pay attention to the 200 EMA, the 200 SMA on the weekly and daily time frame on your stocks. I don't care what you're trading. They even called Bitcoin out off that moving average. I don't care what you're trading. I said the biggest part of the fear, all this is opportunity. You need to know when these people in here are spouting off like they do, because they're full of crap. I'm going to be right back. I bet you I could listen to CNBC today and they'll have no say about any CapEx. They've done it. I've never seen market. I mean, I'm seriously. I've never seen such undermining by CNBC, and a little bit from Squawk since Marley's been on here. It just raises the fear factor. So you got to get to that map and look where we are. And I called out capitulation. Now look at it. Now look where we are. We're in optimism. We're already jumped about 6 legs in 3 weeks. I think Meta's a good swing. We got a hard money. So these people have been beating down the market from tariffs to inflation to recession to stagflation to interest rate hikes to the war, $200 a barrel oil. I mean, $200 a barrel oil, and we're America. To the new Fed chair. I mean, I can just go on and on and on. To now it's the carry trade. Nothing positive for almost a year and a half, 2 years. Nothing positive. And this market's been running up. I kind of see a falling wedge I'm going to draw a couple lines in here. You've got to learn to be the devil's advocate to become an excellent trader. These guys are elitist. Here's a nice wedge. Randy, GLD. On, I don't know what, probably the daily. Or the hourly. Look at gold, GLD. That's nice. GLD. GLD, not S. Did Randy leave? Now, Randy, you told me to look for swings. GLD's a nice setup. Randy, that gimme. Jim, what are you eating? I'm eating broccoli. Meta coming down to the 200. NVIDIA breaking out. We got triple top on Apple. I'm eating broccoli. Apple breaking out. Yeah, I'm going to love this strategy. This strategy is going to keep us in these trades so long. Look at this. Let's say we got in down here at the bottom. I'd still be in this trade. I'd still be in it, but maybe I'd have sold it. Who knows? Me, I would have sold it. Look at that, right? Oh, wasn't fucking paying attention. 6 minutes ago. Dadgummit. I'm liking this a lot. Second day in. No malfunctions. Had my broccoli. To make broccoli taste good, cook it on steam in an Instapot for 10 minutes. I mean, before you do that, put a little garlic powder on it. And then when you get done, take it out, stick it in a bowl, put cheddar cheese on it, stick it in the microwave for 30 minutes. You cannot beat it. Sweet taste. I still get my sweets by eating that stuff. I don't have to eat candy. Don't fight against this market. This is very strong right now. If the ships start flowing through that, the economy's in the best shape I've seen since Trump had office last time. We broke a lot of records. And the economy's in the same shape. The only problem is the main problem, which would have been the interest rate hikes, which I didn't want, and the war. If there's any kind of any kind, it doesn't matter. If them ships start cruising through there, this thing is going to fly. Never, you know. And they baked in, they said that one chick, oh, well, they're going to raise the interest rates
Look at this here. I'm pretty confident about it. It's baked in. We baked it in the price. And she's sitting up there with her boobies sticking out there and that chin sticking up in the air. And I'm just going, lady. Meta, for Jim setup, 14.15 yes, 9.21. Cloud. The 9.21's a cloud, so it gives you an alert when you hit them. Meta. Look here. When I called this bottom out, 3 white soldiers. Now we're at the 9, so I just got an alert. Okay. Do we have a problem here? I'm gonna go get my chicken. So right now we're at resistance. Now I'm gonna pull up the daily when I get back on my new strategy. So we're setting up, so you have 2 different economies. Before we had a government funded economy, and now we have a private sector economy. The private sector always outlasts a government run economy where the government picks and chooses winners. Trump's picked and choose a few winners too. Don't take me wrong. With that Intel and there's a couple others. Tesla. God darn, that thing's cold. Shit. Oh my God. The 60s. Oh my. Don't tell me that spy took Pierce. Oh. $3,700 for these things. Wow. I don't even want to look at my other ones. I will, though. Which ones did I have? Oh, it's going to be sad. 76, 75s. Oh. 3,700. Oh. My God. The video's up. Called NVIDIA off the 200, triple bottom, retest. You can pick about anything right now. I'm so bullish. That's some of the best chicken I ever ate. One meal a day. One meal a day, 2 eggs and a piece of cheese in the morning. That's it. So here you got Meta, called this double bottom out. Now you're coming up to a triple top. Apple, called it out at 305.30. Now it's bullish again. NVIDIA called out this morning. Just that one trade on the SPX, I would have made more money than most people make in a week. I mean 2 weeks, a month. $4,000 for the SPY would have $4,500 altogether. In an hour and a half than most people would make in a month with this strategy. I'd still be in these trades, thinking about getting out right now. No, I'd still be in it. 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 And they would be up from $900, $800, $900 to $34.90. Still be in it until we broke below the 20 SMA. Then I'd sell it. This is going to be easy to make money. It's going to definitely keep me in. It's going to keep me in longer for sure, and it's going to, I think, be easy to scalp. And I'm using the SMAs. These ones I called out $1,100 are at 23 right now, the 76.90s. And I'd still be in it if I had any sense. That would keep me under my $1,500 budget. But if this is true as it is, I'll be buying 5 of them at a time, going in 4 or 5 grand. I know someone that made $30,000 today on this strategy. The guy that teaches this strategy says he suggests everybody take 25 grand to throw it in a trade. I don't know if I got the balls to do that yet, but I will by the end of next year. Predict maybe 5 million in a year. This would be the spot to get in it. The 7,700 calls, or the 7,705s. 1, 2, 3, 4, 5, 6, 7, 14 minutes consolidating. Look here. We're at 10 snuggled up against the 20. That trade alone right there is about $1,300 a contract from here to here. Now, the rhetoric you're going to listen to on these shows is going to be a totally different upscale than what they were talking about for months. And every frickin' thing they said was wrong. Everything. Very leery to buy right here. Just got to learn a little bit more about this squeeze and the time of day. I'm going to have to take that in consideration. Maybe stop trading right around 11 or 12 o'clock and have more time to myself when I retire. I paid $1.99 for a dozen eggs this weekend. Instead of paying $22, I paid $9.91 for 5 chicken halves. Coffee is down $2 a pack. Tomatoes, a tomato doesn't cost me $3 anymore. It costs me $1.98. I paid 85 cents for a thing of garlic. I was paying almost $1.49. Bag of red potatoes, $8. Now they're $3.99. They said when we cracked down on the illegal immigrants, vegetables were going up. They didn't go up, they went down. Just lie after lie after lie from Wall Street. Now they're going to pump Caterpillar. And they were probably wrong about it.
Earnings at a clearing event. You know, if you get a resolution in Iran, you've got some other critical earnings that seem to be meeting the moment, and then this momentum trades back.
It's been here, you dick.
Yeah, we have a lot of the stocks that had got.
No. Is this Josh?
Here into early August with a lot of those pieces back on the board.
Can't be.
These tapes I've ever been in.
Josh Brown, it is.
I'm doing this
Wow.
for 29 years professionally. And
he looks healthy.
It's just like, it's textbook. If you were able
Now they're going to come up with the idea, well, if you were able to get in on the dip that we did not call out 3 weeks ago, we were calling for $200 a barrel oil. Now they're all like, yeah. The momentum was there when we were pulling back. The snake was meant for that kind of strategy. Microsoft, Meta. Oh, they were so bearish on Meta. $400, they say. $300. Too much CapEx spending. I'm going to go through my watch list, see if I got anything. I've ate, so I'm ready to trade again. Yeah, I'd have made $400 or $500 on this call if I'd have bought it. The 7705s. Just sitting here eating my lunch. Does anybody want my leftovers? Got a little bit of meat on the bone if you want it. You need a garden? Yep, I got one, but I'll definitely need to fix it. Yeah, because, you know, I'll be eating my own potatoes, eating my own carrots, eating my own broccoli. Have a few onions, have a row of onions. Just got to learn how to store them. Well, I got my rant off for lunch. I just want to let you know that, and you already probably, some of you already know it if you're street smart, don't believe everything you hear from these people. See, this is called the 10, for the ones that are now learning this, it's called the 10 SMA and the 20 SMA. I use it the same way as I would use the 9 EMA and the 21 EMA on the crossover. I also have a chart that has a cloud. Where are you? We're getting down on the stock now. Where are you tonight? I searched the world over and thought I found true love. You met another and you were gone. Can't find my cloud. What do we got here? An Anchor VWAP? Do I got an Anchor VWAP on this? I sure do. Or do I? No. I thought I saw an anchored VWAP on here. No. I've got so many charts I don't know what to do with. I better keep, instead of straying away, I better stick to what I'm, because we were at, this, I did this the other day and missed out on a good trade. Now, are we going to hold this, or are we going to drop below it? That's the question. We got the 7710 or the 7705. I'm going to go with it. I want it to stay in the money. Right here. Start to go up. Dadgummit, I missed it. We're squeezing right now. If this thing starts to drop below, it could be just a short 2-candle bounce. Or a breakout. You got an ascending triangle. Right there, see, I'd be up on. Everything's smaller, seems like. Now, or should I wait for this to scoot down a little bit more and maybe touch the 10? Right about now is where I'd buy it if I thought I was bullish. Now we're under the 21. I mean the 20. So I don't want to take it here. I want to see this cuddle up against that 10, 20. That or I jump in and Okay, here comes the squeeze. Well, we're at 1170, it's going down and the fuckers are going up. I used to do that shit when I was trading pennies. In the old days, I'd wait for the 63 right now. New days, I'm looking at a squeeze. The gap between the 200 and the 20 is huge, which is scary. So I don't know if I'd want to enter right here. Just the fact of that. It's just huge gap. But if these idiots on here, here's got that Josh, appeal to
the Fortune 500, where Palantir is sort of dominating on the AI front, that message where, wait a minute, you guys are seriously going to hand over the business alpha of what you do to Anthropic and just trust that they're not going to launch competing products? People are heeding that. They closed 220.
There it goes. Man, that was a good call. I should have, if I wasn't in the condition I was yesterday, I'd have took PLTR. There it goes. Randy. Randy. That's called one out 1170. It's 1470. Hey Yankee. Do you have a lesbian girlfriend? Your ex was by? You had a lot of fun. You little dog. The fun ran out and she ran away with her. Don't ever date a lesbian. Look at that, beautiful call. $500. I did it again. I'm loving my new strategy, Randy. I think this is really going to be sweet. Did you do your chart up? Why didn't I buy it? Because I'm practicing. I'm practicing. It would have been perfect. $500 right there. I want you to think about one thing. Think about the opening of Hormuz. Think about $2.50 a gallon of gas. Think about voting out the communist and the socialist, or you're going to get $4 or $5 gasoline again, like you did under Obama, like you did under Biden. The war on energy. Think about all the wars that are going to break out if we keep a Democrat in office. Maybe a couple more genocides. You can throw them in too. I'm going to go get my water. Think about at least take home of 20% inflation. Think about the opening of the borders. Who has not set the trap? This. Look at this. Bounce, bounce. Each one of them produced new highs. Another thing to pay attention to is when these moving averages are moving up, you're still bullish. When they start to curve down, like right now, look here, we got this snuggling up against the 20 right now. This is the best time to get in the stock. But we're up so high, and it is 11:30, 11:27. Last time we hit it, we had a real good run. This was an ascending triangle that I called out. I'm gonna go get my coffee. Man, that's $600. I don't think you can beat that.
too many people on YouTube. Is anybody picking up on it yet? What's the new strategy? Jason? Get your pen. Are you in there? I'm gonna give you a YouTube. I want you to watch this YouTube channel. I want you to watch the YouTube channel. And I want you to watch this video, the new strategy that I'm doing this week. The last two. Do it tonight, or you can do it now in your own time. Anybody else out there watching?
Bodies. So once we broke out of that, and we respected, and we noticed that the 20 SMA is lined up with the 200 SMA and holding up, that means this stock's going to be bullish unless it dips on down below it. But this is falling wedge out of a snake gives me the aftermath that I might want to go ahead and stay in this trade. So as it broke out, I had approximately two.
Then watch the other one I did too, about the 10
SMA and also off the 20 SMA.
And the,
so let's say I jumped in. I did.
What is that? The 10.
Let's say I jumped
the 10 and the 20
on this strategy alone. We've got the 20. So now, as long as I respect the 20. I want to stay in the trade. But as I started to go up, my resistance level would be this here triple top. We got the wick, body, and body. So that's going to be my exit idea. Could be one of them, you know.
Learn it. I think and learn chart patterns. But we're using the 2 minute. I'm going to be doing this all week. And calls went to $1,900 on that last call here. These went to $1,900. That's $800 a contract. Just in 20-some minutes, 25 minutes. There it is. $600, $800. I gotta get my coffee. I don't even know if I put an ice cube in it. I don't care. And I don't know, these socks that I'm wearing is giving me a real boost of energy. I could feel it this morning at work. I'm going to buy more of them. I'm going to say, bitch, I'll buy 7 more pair if you throw that hat in there. And I'm talking to a man, Vic. I really do have a lot of energy. Josh has lost about 30, 40 pounds. I couldn't recognize him. Okay, look at Meta. Watch Meta. Watch Meta. Watch Meta. Watch Meta. Fuck, what am I doing? Watch Meta. The 585. Get 5 of them. Or 3. Now, if we're going to break the 20, I should get 5. Now, what's going on here? This thing ain't moving around. Let me see here. Let's get a... fifth, 585. There's something wrong here. Wow, don't tell me this platform's frozen up again. There we go. Now it's working. Network issues. Apple's moving. It's dropping. What's SPX doing? Nope, didn't do it. Now, what was I looking at? That's the 2 minute. What was I looking at earlier? Oh, the 200. Yeah, I got that right.
So now it's crossing down below the 200. The 580s. Metis pulled back. 2 candles. Penner's earnings are strong. The Reddit and Snap results. Snap got Snap earnings this week. Basil's, Amazon stock strong. Earnings on PLTR, Caterpillar strong. Okay, I'm going to put Meta on another chart over here. And I think I'll get rid of the linear channel chart. Hold up there, boy. Three black crows. I'm giving Josh a lot of time. Bounce back. You can do it. Tweezer bottom off 3 black crows. Might have to put a stop in this real soon. Just don't start moving. Taking its sweet time, come on. Beautiful, right off that 10. Well, there's a lot of tape, don't look too hot. I need a engulfing candle here. Down 70. I don't know if I should sell it. Apple, nice call on Apple. PLTR 162.65. We're just now walking into the 21 EMA cloud. Dadgummit, come on. There we go. Is the 10 going to be the resistance now? Break it. Show us some mustard. This would be my exit idea if I was up. I'm flat. Tempting to sell it flat and get back in it. Come on, break it. Keep going. You're on your way. And of course, I'll trim it here. Now I'm coming up to the 20. So this is called a 3 black crow, tweezer bottom, exit idea. And if we can get a whole body inside of this squeeze, and here's the cloud. We broke the cloud. So if the 9 crosses the 21 EMA, we've got the 63 resistance right up here. Now's the time to scale out. Damn, I just got rid of one. So. Where are we at here? Okay, I'm at what's the fuck? Where are we? 670, 635. What the fudge? I'm gonna sell it to market. Do it. Close your existing meta position. Use the button. Position card. Oh, okay, I got you. I'm out. That's my problem. I had it on the limit. So what did I do? Okay. Okay. And then Zoid, I got a new trading strategy. That was nice. I'm really starting to build my confidence up now. This strategy, I mean, this was my old strategy. I just picked up 3 black crows on the 2 minute and flipped to the 1 and got found. This might break. So this is one of my favorite kind of trading strategies right here. It's called the 3 black crows with a tweezer bottom. You notice that the green candle is bigger than the red one, and it broke out of it. And we run up and hit the 200 SMA, and that's the exit idea. We had to break the 9 and the 21 right here. So that's where I started thinking, okay, I got to move. I got to break that cloud, and I mentioned that. Exit idea was the cloud once we hit the 200. We hit the 200. So that's perfect 3 black crow VWAP trade. And I didn't have enough contracts. But I'll set a link in it here. I got a script. Golly, cockroach. No. No. Perfect. I'm loving this. Oh. Good. I gotta cut my cussing out. As I watch the stock keep going up, I feel like a old sick pup. I can squeal, I can howl, does it do any good? Would, should, what should I do? So I sold the cause. They went up $100 a piece. I called the 3 black crows. Went along with the 3 black crows. You had a tweezer bottom. I sat here and creamed my jeans as it rose on up. There's nothing better than the stock trading orgasm. Nothing better than sleeping with 2 lesbians. Ask V. Whopper. He'll tell you about the life, but his girlfriend slept with his ex-wife. I was riding cloud 9. They went to 860. I got out at 670. That could have been another $400. Life really sucks. I'm learning this new trading strategy. Don't mind me. I'll get it down this week. My goal is 10 grand a day. I can do it anyway. Nobody seems like the wash.
I feel like an old sick pup. I can squeal, I can howl. Doesn't do no good.
I see that I got to move that microphone back a little bit when I'm singing. Probably way back. Man, what a trade. Unbelievable. Wow. Jesus, Potbelly sucks. Randy. These things went to $960. That's $600 on just 2 contracts. They're going to go $1,000. Now you got the crossover. Oh. I'm really not going to complain today. I like this better than my old strategy. And I made a killing on it. Anybody got any baking powder or some powder, body powder? My hands are sweating. They haven't sweated like this in a long time. $10.60. Okay. So I got to think about this, what I'm doing here. I just want to cry, man. Shit. That's $1,000 on that 2 contracts of $1,220 on Meta. Now it's a lot more. Plus, if I was paying attention, we had an inverse Head and Shoulders. Right to the penny. Plus a double bottom. This is it, see? Left shoulder, head, right shoulder, take it to bed. They're going to start pumping Chipotle now. Watch them. They are. Well, everything else is running. This Mexican stuff is rock bottom. It's down over 6%, 7%. Now, I do know this. In a bull market, momentum market, let's say the stock that you like dropped 7%, that's a good opportunity for a day trade. 7%. I did that with Tesla all the way up to $2,200. Every time it pulled back 7%, man, it was like a buy signal. I heard it from some moron here on CNBC when they were actually doing their job. You know, these hollow socks is like taking 2 hits of speed. Randy, go out and buy some hollow socks. Your sex life will be 10 times better. $10K a day. I'm telling you, baby. You and I will run off into the moonlight. Go live on some beach. Now you just want to crawl it up. You just want to stay in the trade. Unless you want to scale out. I mean, shit. You're up 100%. Nobody calls trades out like Bobo. Hello? This is Joe Biden. I want to tell you, quit talking behind my back. I'll send my Secret Service over there to take care of you. A couple of illegal immigrants. My son, Hunter, got him strung out on cocaine. He could do the job. Oh. Whatever you say, Mr. President. Whatever you say.
The likes of Intel and AMD. Who else? Who does it disfavor?
You.
Who does it disfavor? To anybody that's
CNBC.
Stuck in their ways.
Stuck in their ways. She has room to talk. For 2 years we've been here. They're bullish. Ain't that funny how all of a sudden they become bullish? Last week we were doomed. 200-gallon barrel oil, I think I heard last week. So I don't want to listen to these people anymore. I'll just have to make it more entertaining on my behalf. You might not like it. Oh, snap. Is up 68 cents today. Had a negative penny for earnings. A double bottom. Inverse head and shoulders. So here you go again. You have the crossover. It stays above the 10, the 20, the 10 SMA, all the way up here to the top. And then it crosses down. So that's the first sign of bearishness. Now you're at a triple bottom. Last time I called this trade out down here on the 20. You're still in the trade, and there goes an alert. Let's see what we got here. We got Sophie. Let's put Sophie up on the map. Randy. Oh, that's a resistance to break. Okay, well, that's not cool. We're gonna just go, oh man, look at that. I really, why did I have my resistance level so high? That's a mistake on my behalf. Should have had it right here off this head and shoulders. Inverse head and shoulders. Yeah, that's what I should have done. Or at the 200. 200, that's where I should have put it, 200. If you can count to 4, you can make a little bit more. That's a 100% trade that I made there, called there on Meta. That really kind of hurts. How much did I take? $70. So no, it's, well, that don't make sense. Getting out of the market is an instant sell, so I mean just within a second. So I like that, and I'll be using that when I have these big breakouts, for sure. Tempting to go outside and get a little bit of fresh air and come back in here. I will. Put on my shoes. Just go for a round of building walk. And today's shoe is Brooks. DNA Loft, nitrogen injected. Ghost Max. So, Sophie was one that I wanted to watch. I knew earnings were coming out, and I had all this set up, but I just didn't set the alerts right. I mean, it hit my low support of 15.19, and I'd done this like last week. 2 weeks ago. Not last Sunday, but the Sunday before. Well, maybe not, because this happened last week, the pullback. But I still had them supports on there. That's why. Triple bottom. Oh, man, that was a beautiful sight. That was a big mistake right there. That was a big mistake. I should have, I don't know what I was thinking. But that should have been one of my trades. Swing trade to boot. This was what's his name? Funky's trade. And I kept telling him, bring it down under 16. Because that's where we were on a double bottom when we had that good bounce.
That's on the yearly. So when you're bullish and everybody else is bearish, charts never lie. Fundamentals do. I do a single knot or a double knot. Yeah, it don't matter. I'm just going to go around the building. I'm going to see if this shoe unties by the time I get around the building. It's not a very big walk. But I got to get away because I just threw away. I mean, Jesus. I don't want to cry like a river, but like Randy said. They're at, yeah, they went to 1100 and something. So when I come back, I'm going to talk about how important and why it's important to set alerts. Why it's important. I think that's what I'm really trying to just prove to you why it's so important. I'll leave you with the intellectuals.
Absolutely an AI story.
Right, and you have clients like Character AI, Hippocratic AI, and for simpletons like me to explain this, you rent computers on the internet. Instead of buying your own servers, keeping them in an office, you can rent computing power from DigitalOcean, you being the customer. I mean, you guys take care of the physical hardware. I mean, is that basically right? There's so many players in this space now, aren't there?
Yeah, so we are exactly like AWS, but focused on the AI native cloud ecosystem. So
same day as yesterday,
including Cursor and others.
Even
so we focus
Meteor,
not on the large classic enterprise, brick and mortar enterprises, but we focus our efforts squarely on the AI native ecosystem. So think about this as the Netflix, Airbnb, Ubers when they were in 2009, 2010 timeframe. So our target market are these AI native companies that are re-scripting software.
And Patty, I guess the larger question for the market as it's looking today at some of the chip stocks and the DRAM stocks rallying, and we're looking to AMD's results after the bell. Can this whole ecosystem continue to benefit from increased spend, and for how long a period of time? How are you looking at this whole AI revolution and thinking about how long it could go on and how much CapEx there might be?
Yeah, and it's a great question. I'm not a betting man, but in terms of how long we can keep this going, we are taking a very different approach. We are a very, very disciplined company when it comes to investments. We have all seen the headline CapEx numbers from the large hyperscalers. We have increased our CapEx significantly as well, but we are one of the very few companies that are projecting 50% growth for next year. And we are very disciplined in the sense that we are a positive cash flow this year and into the foreseeable future. We just reported 24% adjusted operating income margin, and we are very cash flow positive. The last 12 months, we are at 17% cash flow. So we are pursuing the AI infrastructure trade, but we're doing it in a profitable manner with little to no debt on our books.
I think you're smart to hammer home free cash flow positive in a climate like this, and so you're ready for whatever comes in terms of the time frame. Patty, thanks for joining us. Really appreciate it today.
Thank you.
Check back soon. DigitalOcean CEO Patty Srinivasan. Coming up, Apple back in the spotlight as its lawsuit against OpenAI heats up. We'll have the latest on Silicon Valley's legal showdown here next.
Where's Tesla going? So that's 20 cents right there on that NVIDIA 210. What am I thinking about? Amazon. That Amazon this morning was a spot. So back to the 200. I'm going to set most of my alerts at the 200 unless I'm earlier in the day. I'll be setting them at the 20 and the 10 SMA. Later in the day, I'll be setting them at the 200.
Welcome back. We usually have this at 1:30 p.m. Eastern. We have an earnings alert on Novo Nordisk.
Who's
Granted,
this?
they're in Europe, Annika, but I still think we weren't supposed to get this yet.
Shut
Annika
up.
Kim Constantino. What's the story?
Woo!
Hey, Kelly. So, yeah, Novo is now.
My name's Jim Howard.
Earlier than expected. It was slated to report.
I'm 65
overnight
years
just
of
ahead
age.
Of results from Eli Lilly, but we now have Novo's full earnings release. So, Novo is raising its full year guidance on both the top and bottom lines, not comparable to estimates due to being in constant currency.
Well,
But the
if you
company
say it's a
increased
goal,
expectations for
I'll take
GLP-1
it.
product sales as the reason for the improved outlook. But Novo said it's expecting a sales decline within its U.S. operations, which may be a factor driving the stock down today. In the release, Novo said that the lower U.S. outlook is based on current prescription trends for GLP-1 injections, more competition, and negative impact from reduced obesity medicine coverage in Medicaid plans. Novo is also seeing lower realized prices from the most favored nation deal it struck with President Donald Trump. If you remember, that was back in November. We also saw results on the Wegovy pill today, which now has more than 5
I'm gonna go to
million
previous
prescriptions
high.
in the U.S. since its launch in January. But its sales for the second quarter actually came slightly under analyst expectations, which could also be weighing on the stock today. So we're going to continue to dig through this report and can come back to you with more headlines, Kelly.
Yeah, getting some traction with that pill, but again, earnings maybe a little bit less than hoped, and the shares are down about 6-7%. Annika, thanks. Meantime, Apple is coming off back-to-back losing weeks for the first time in a few months. Shares are down 10% from last week's record high, and now it's back in the legal spotlight as it moves to escalate its lawsuit against OpenAI. Mackenzie Sigalos has more in today's Tech Check. Mackenzie?
So, Kelly, this case is all about whether Apple's hardware advantage can follow its engineers out the door. That question getting a lot more urgent as Sam Altman and former Apple design chief Johnny Ive work toward OpenAI's first consumer device. Apple is now trying to accelerate its lawsuit against the startup, seeking records and device data within 30 days of a court order, followed by depositions from former employees and company representatives. Apple says their own independent probe into this is ongoing, really leaving that door open.
Okay,
adding more
who thinks we're going to break out here or pull back? Who thinks we're going to break out or pull back right here? We got the 10 bunched up against the 20. It's 12:30. It's 1:30 Eastern time. Are we set up for another breakout, or is it time to have a little bit of sympathy for the fat cats that got in too late? As we approach the 20, this is it. Do or die.
The 7735s. That's the SPY. The SPX failed. We got a double bottom. I have a problem. These socks. I mean, I just had another cup of coffee and wow. And that blood shooting up to my heart. We're right at support. I missed, there's $100 right there. The 11. Shit. Okay. Well, missed that one. Oh, they got that Basset Hound on there. $11.90, and they're at $11.90. NVIDIA. Okay, I got NVIDIA support. I'm going to raise this support up to the top of that candle right there. This one here. I'm going to give this to Vegas because I think she's in this trade. Watch NVIDIA. Let me get my video back on here. The 215, I don't want that. I want the 210s. 5 of them. That'd be $1,391. I missed my chance. Here, I'm going to fix this. Bring this up to that. Replaced. Oh yeah, I was going to talk, I didn't take my walk, but I'll talk about how important it is to have alerts. Do you understand me? We'll just wait for my alerts. Why? Because we're under the 20. You don't really want to take the trade until it breaks past the 20 and respects the 20 SMA. You can give it a shot, go in small and add on, but you got a big gap between the 20 and the 200. SPX bounced off the 20 again. New high.
And dictated by a rise in the
I didn't think a pair of socks would mean that so much to your body, but jeez. That's $300 right there. The 9, I mean, this thing is a no-brainer, man. I'm really loving this. There'll be some other time where something else will probably appeal to me better than the last one, but this is real good. $14.50. We're kicking butt Action Jackson, if you're still out there. Action Jackson, are you on YouTube? Give me your pronoun. I want your pronoun. You're not going to get my pronoun, buddy. Marvell. New breakout on SPX. You don't think this thing has more room to run? I want somebody to give me some credit for being such a bull. Not bull crap. Randy? Randy? Oh no, you're in the SPY. Why are you buying puts?
Ready. Oh wow, oh wow. Washboardjim trade stocks at dawn. He's got his eye on the charts till the night is gone. Patterns dance like a wild old song. Breakouts rip and dips of gold. He's got the secrets the wise ones hold. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. All right. How does he do it? How does he do it? Moving averages, they paint the tail up and down like a shipping gale. Catching the wind, he sets the sail. Green candles climb, the bears retreat. Jim's got rhythm, the market's beat. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. All right. How does he do it? How does he do it?
How's it doing? stock, SPX. Whew. Here we come back down again. Okay, here it comes. Now the idea is, fuck, we've had such a miracle run. What are we going to do? This is it. Is people going to cash in because we've had such a great run? Or should I jump in these 3 black crows now or wait for the confirmation? We wait for the confirmation. We wait for the next candle. We don't jump in early. That's the 1 minute. Whoops. I'm off guard here. 2 minute, we're right at the 20. Let's see if we do it. What did I get in at? 910. Now I'm at 10. I mean, this can drop. You've got to keep an eye on the tape. I'm sure I only got one. Better. That was it. I'm out. Sure, I'm out. What did I make? I'm out. I'm making it back. These are, I'm loving this strategy. I really am. My accuracy is going to be 98%. I just feel it. I mean, how much is that money? How much is that? Just in that one trade. And it took how many minutes? 2 minutes? 910 minus 1080 is $170 in 2 minutes. So 170 times 30. So 170 times 30 is $5,100. No way. 170 times 30. Fuck. Are you kidding me? $5,100? You're not listening to me, Johnny. Why are you bearish? Did you watch my video? Tonight when you're eating your cheeseburger, I want you to sit back and watch it again twice. SpaceX, they're pumping SpaceX. Now here's that chick that was sticking her breast out, I think. No.
If those insiders that can now sell don't do all of that selling that could potentially happen, right?
Cleavage.
Short covering, and you could potentially see a bounce back in the stock. I was talking about this with Jay.
Dead cat bounce.
So going to be interesting to see how that plays out.
Yeah, and again, they've put it so far near about it never went below 100. It's up.
Oh, we're so bullish now. It's just unbelievable. It pisses me off. It really upsets me how these people manipulate the market. I've called 3 bottoms when they were still calling more bottom. Then I called this bottom in advance when they were at the ultimate $200 a gallon barrel oil. They've never said that before. And we had a war on oil under the Biden and Obama regime, where oil was at $1.30 a frickin' gallon. I mean, a barrel. For months. But they weren't like this. they didn't act like it's doomsday. Obama bombing Libya and Syria and all them fucking countries, threatening Russia. And then we had a war on oil in our own country. When I say we've had days a whole lot worse, they have been a whole lot worse. And the same puppet Biden was under Obama's wings, and they had the same war on oil again. And we were giving it away. See, on the 1 minute, I'd be bearish right now. On the 2 minute, I would start to be bearish, but I wouldn't be bearish yet. Why? Because the 10 is above the 9. But this is 1 o'clock, and this is not my best time of the day. So I am going to go outside and do my walk and come right back. I think that's exactly, I got my shoes on.
Markets are in rally mode as we hit new all-time highs. Welcome to Power Lunch alongside Dominic Chu. I'm Kelly Evans. Brian is out today. Records for the Dow and the S&P 500, with the Dow up 1,000 points today, and both indices led higher by earnings winners.
And the next earnings test comes today after the closing bell. Chipmaker Advanced Micro Devices set to report second quarter results, and the expectations are big. Earnings are expected to grow more than 200% on a year-over-year basis. And then on top of that, it's SpaceX. First report as a public company. Those shares are down, yes, 50% from their record highs. Investors will be looking for a catalyst to reignite this stock and provide some rocket fuel for SpaceX, Kelly.
Let's begin with this record-breaking day on Wall Street. The S&P 500 hitting an all-time high for the first time in 2 months. Catching a lot of Wall Street flat-footed, by the way. So if you're in that group, don't feel bad. Just look at these year-end targets. Goldman, UBS, Wells Fargo, JP Morgan, Barclays, they all have targets for the end of the year below where we're trading right now. Now, in fairness, Dom, there's 6 months to go. So 5, 6, anyway,
Very good point.
4 months left in the year. I don't know. Did many on Wall Street get this rally wrong? Or is the market justifiably going higher this year? Joining us now is Raymond James Chief Market Strategist Matt Orton. His target is 77.50. Matt, it's good to see you. Is this as good as it gets, or are we going to have another one of these banner double-digit rally years?
Hey, Kelly. I mean, it's looking like we're going to have another double-digit rally year, because we've been saying it's as good as it gets with respect to earnings quarter after quarter. And now we're in the second consecutive quarter of 20% plus earnings growth. I mean, we're sitting at over 40% EPS growth. And even if you remove some of those one-time items that you got from gains on certain tech companies, we're still at over 35% EPS growth. So the backdrop remains incredibly strong, but selectivity is really, really important. And what matters, I think, critically for investors is being leaned into the right sectors to get enough beta on the upside, but still capturing a little bit of this idea that there is room for broadening to take place across the market.
But it's sort of like, don't overthink it, right? I mean, a lot of people have been watching the moves in the semis and this and that and worrying about a bubble forming. We were talking about this last hour, but the size of the market relative to GDP, again, all-time highs. I mean, you could look at this and find reasons to worry, but if you position too conservatively, you're sitting on the sidelines for what's been an ongoing monster rally with earnings confirming that this is not just, a bubble.
That's exactly right. I've never subscribed to this notion that there's a bubble, whether it's in AI or other parts of the market, because we continue to see that the earnings and the actual fundamentals are justifying the movements in a lot of these companies. So while July was incredibly painful across the board, It really was positioning driven. It was just overextended investor positioning that needed to wash out a little bit. And we're clearly seeing the strong fundamental read-throughs from earnings season supporting a rebound in the trade. So AI CapEx beneficiaries, I continue to believe, is an attractive part of this market. And I think we've seen a confirmation that we're at the bottom and that you can feel safer adding to these parts of the market. And again, it's just every morning you wake up and there's another earnings that supports that trade going forward.
Matt, it's Dom. Let's talk about the second half of this year now, right? If you take a look at the way things are shaping up, we are in a midterm election year. There's a midterm election cycle that's really going in earnest right now with primaries and whatnot. We know that there are some seasonality factors around some of those midterm elections. We know that there's some rate uncertainty, regardless of what happens in Iran. I'm not sure exactly what the positive catalysts are, or do you take your 7750 target and re-rate it higher because there's new data to support all of that re-rating higher?
Yeah, Dom, I think we're going to see a little bit of choppiness, at least through the end of the summer, because as you pointed out, there are seasonality effects. We are in a midterm election year, and we don't exactly know where this peace process is going to go. Is this going to be MOU 2.0? That ends in the same position that we had happen a couple months ago. So investors still need to be on guard with respect to some of these potential downside catalysts, but that doesn't mean you can't lean into the upside potential of the market. And that's why capturing some higher beta areas of the market, like leaning into the semiconductor AI CapEx beneficiaries that are working, owning smaller cap companies where we're seeing earnings revisions continue to tick higher because of the strong fundamental growth of this economy. Those are places investors can capture the upside, but also look to areas that have worked and provided a little bit of a cushion during the month of July, like healthcare where there's growth, biotechnology. And if we can get a little bit of a reprieve from rates, that's a good place to be.
Speaking of earnings, Matt, stay right there. Let's talk about the biggest winner in the S&P today, which is Palantir. Best day in more than 2 years after the company delivered a blowout. Is this my? Yeah, see, I'm like, I don't need to say this. Seema's right here. She can tell us what happened with Palantir, Caterpillar, Seema. These are some big movers going back to the theme Matt was just talking about, which is real earnings.
Yeah, and it's underscoring that enterprises are actually investing in AI. Let's start with Palantir. No other software company, Kelly and Dom, is delivering the magnitude of sales growth that Palantir is. At least so far this earnings season, a 93% jump in quarterly sales. But what the market is really fixated on is that commercial opportunity. So that's the software that allows companies to integrate AI on top of their existing systems versus exporting their data to the frontier labs. That grew 150%. And it sort of
coming back again, these are bullish.
Harp, who's been saying that, companies need to...
Shut up. They're at 850 right now. Let me clear this. Dadgummit. Now we jumped up. Shoot. There's $100. Them all bullish. Just a second late. 5 seconds late. We're still bearish because we're under the 20, but these are bullish candles. I still think we need to have a little pullback, but so it's the 10. There we go, right there. Now we're going to find out. There was 810 right there. Shoot. This was the last, YouTube, this was the last trade I took. I jumped in at 9.10. And this sold it at 10.80 in a matter of 2 minutes. And then it pulled back. Did you? I thought I read that same sentence against Bug. Second, your sentence twice, but no, it's just once. $8.60. Is it going to break it? It's going to break it. There we go. That's another $100 trade. $8.60 to $9.40 in a way. Not in it yet. It's squeezing. Either way. Well, it's a tough call. Two, 4, 6, 8, 10, 12, 14 minutes. It's really a tough call right now. Oh, I'm not looking at the right stock. I am over here, but there's a 63 right here. It's a one big red candle. We do it. Yeah. Shit, the only support's right down here. Okay. right there. Got two of them actually. Nah, I had my chance to get in it. Shoot. There's another one, another good trade right there, passed up. They look bullish, they really did. But I was just seeing these couple here, I figured we could come down one more time and catch it. Still might. But that was a good $170 trade right there. On $1,000, less than 1,000, 850. I don't want to listen to these people really right now because they got me so upset. Any of them. Marley especially. She's a real smart person. Don't take me wrong, but her constant questioning the market and listening to these so-called analysts that are saying we're bearish, we're going to 200-gallon oil, we got more drama coming. I wouldn't trade until they open up Hormuz. Trump's an idiot. I don't even want to listen to them now. I mean, they really give me what you call sour grapes.
I don't care if the sun don't shine, but better off people will wonder. No man if it ever quits raining, except the kids are afraid of the thunder. Say sour grapes, you can laugh and stare. Say sour grapes, I don't care. Couldn't care less if I didn't have a friend. Some people would say I was crazy. It wouldn't work, 'cause I don't need money. Except the same folks that said I was lazy. Say sour grapes, you can laugh and stare. Say sour grapes, I don't care. about good times that we shared. Don't mean a thing today, say sour grapes. You can laugh and stare, say sour grapes. I don't care.
Break it. Break it. It's not nice to point, Magnificent. Ain't it? Not nice to point. Sour grapes. Sour grapes. Sour grapes. Okay, now we've got the 10 trying to cross the 20 on the 2 minute. And I think this is the 9 EMA right here. Yeah. 9 EMA. Now I'm pulling back. Is this it? Is this the sweet spot? Using this time frame and this strategy. And I should have 850. And I'm looking at the wrong frickin' chart. Where's it at? Where you at? What's the SPY doing on here? Ooh. Oh man, look at that. That would have been a good shot too, right there. So we got a yin yang, and we got really in this. It's an in between. It's a Darvis box. It's a Darvis box. They said, well, Jim, I've never heard you use that word before. Joby. Resistance. Another breakout. I didn't put a note in here. NVIDIA marked below the implied volatility of 211. Where's my NVIDIA? I need NVIDIA. Oh, damn. NVIDIA broke resistance. Found support. Okay, here we go again. We're at 840. Now we're at the bottom and we're squeezing again. So if this has any mustard, this is the spot. That's AMD. Never mind. Jim, did I ever tell you that you were a fuck up? Not really. I can't see it very good there. What time is it? 1:28. I'm really debating if I want to take this trade or not. My hands are sweating. We're at $8. You know? The old Jim would wait. Let me see the. Shoot, there's $8 to 860. The old Jim would think about it, taking it on the 1 minute. The 2 minute, I'd still think about it, but it's not as convincing until I train my eyes to trade this 2 minute time frame. They might come after a few, because we're at the 20, we failed the 20, and we're at the 20, and right there would have been $120. Just that one candle. on the 77.45s. Triple top here. The video. This is only one guy I'll listen to on this channel. One with common sense.
Open up the charts to 2 weeks, we can clearly see that over the last 5 or 6 sessions, literally very few wiggles in the yield curve as there was in the previous couple of weeks. And the main reason for that was, of course, the Fed. Once the Fed came and went, a major steepening occurred as 2-year yields dropped more dramatically than 10s, but everything seems to be moving rather parallel these days. And do remember, you pointed it out, we're down what, over 5% in oil, so we're following oil, but not the intensity of the oil moves in terms of the drops in yield. Right now at 419, we're about 15 basis points below the high yield close at 435, and on 10s, hovering right now around 463. We're about 11 basis points below their high yield close at 474. Many continue to watch what's going on in Japan. Not so much the yen, which is floating up just a little bit after the positive intervention flows, but what they're looking at is what the response is in the interest rate feedback. If you look at the chart there to the left side, that is the high yield close on the 9th of July at 286. We're hovering about a half a basis point below that right now. So interest rates seem to be firming up, almost begging the Bank of Japan next meeting to raise rates because intervention only takes you so far. Kelly, back to you.
All right, for now, Rick, thanks. Rick Santelli. Coming up, SpaceX reporting its first ever earnings or I should say quarterly report probably, in less than an hour. More than, anyway, after a 40% pullback from its recent highs, can the results relaunch the stock? We will get into that with the shares up 8.5% today. Next.
Actress Kristen Stewart says Trump's policies are basically forcing her to leave America. I'm just loving it. Leave. I'll buy anybody a free ticket out of here. To Iran. Fuck, in the video. This market. Ugh. No! Wow. I had a chance to get them cheap. It's the 200, the 200, the 200, the 200, the 200. Inverse head and shoulders. 3 black crows where I jumped in the trade. Man.
Welcome back to Power Lunch. Shares of SpaceX are rocketing. Yes, I said it. Rocketing higher today as investors count down to the company's first quarterly earnings report as a public company. Now, despite today's gains, shares are still down from where they were trading in those first few sessions post-IPO, and now sit nearly 50% off of their June post-IPO highs. So what should investors expect from this afternoon's big earnings report? Joining us now with his take is Macquarie's head of U.S. software and services research and co-lead on SpaceX coverage, Steve Koenig. Steve, thank you very much for joining us. Maybe we'll just start with a broader open-ended question first. As a fundamental analyst covering SpaceX, first earnings report, lots of paperwork, lots of commentary coming out. What's going to be the big driver of the next move in SpaceX shares?
Hey, Dom and Kelly, thanks for having me. Yeah, you know, I think big picture, people are going to want to just hear more about their progress towards their long-term story. And I think the launch business and the ability of that Starship to get into space and to lower launch costs, that's key leverage for them going forward. And Starlink is their profitable business, driving over half their revenue now, so continued momentum there. And then the engineering side of the AI story, getting those GPU racks into space on the new AI satellites, which they expect, investors will want to hear about that. And I think that the value here is really in the long-term story. And so that narrative about the progress in leveraging their launch business and their satellite technology to get to AI in space, that's really the key to the story.
These are all, they're all converging, all of these stories and themes for SpaceX overall. But if you had to kind of isolate, if you really had to isolate, what's going to be the bigger driver for the investor sentiment story? Is it going to be the more space-oriented stuff, or is it going to be more the AI data center and rack solutions type narrative that they're putting together? I understand that they're all going to converge at some point together, but from the first quarterly report as a public company, which one's going to be the big driver?
Yeah, well, there's not going to be a lot of quantitative stuff to show in terms of the orbital data centers, but the contracts they have with Anthropic in Q2 and then layering in with Google and Reflection AI in Q3, those will drive big terrestrial AI revenue. But investors will also be looking at Starlink, and the subscriber ads, I think, will be an important number in terms of current progress and current momentum. We're looking for about 1.6 million ads to get to about 12 million subscribers, which is about a double year on year.
Steve, can you guide the souls in these prediction markets? Here, let me give you some odds on, what is this on Kalshi right now? More than half think he's going to say Colossus, Optimus, Anthropic, OpenAI, Tesla, Mars, Grok, and AI. Only 20% think the word merge or merger will come up, although 64% of people think that could happen before 2028.
You know what? You people have been wrong, right, and left, so don't be predicting something that you don't know nothing about. Why do you, they're not going to unite. I don't see how you can talk about it. These people can talk about Elon when they hate him. Okay, we're coming down to support here. Now we're still bullish because the 10 is above the 20. I'm assuming. And we got a triple bottom at 77.38. Maybe a little lower. We got a double bottom for sure. No, that can go a lot lower. But this is my support right here. This is where I first called it out. Right there. So, are we going to stay bullish? We'll find out. I'm in. So I got in at 8 and we're at 780. So I'm going to get out of it. And I got in at 780. We're at 950 right now. What is it at? Market map. Let's see what I made on this one. $60. No, made more than that. Made more than that. So 940 minus 7.80 is $160 in I don't understand. Less than a minute. So SPX 847740 calls, a buy at 780 and out at 940 in less than a minute. 160 bucks. I'm gonna love the strategy. I really am. I feel like I'm pinpointing them better. And I'm using the SMAs on 2-minute time frame. I mean, it's incredible. This is what these fat cats use. This guy that showed me this strategy has been in the market since, I think, 1979 or something like that. 1989. And Hess, he's black. Liberals. Any liberals out there? Black people can make money too. So can lesbians. They're 1060. $8, $9, $10, $60, $300. I'm gonna love my trading idea. Jeez. I need some. There's only one song I like of this chick. And it's bad that she has my last name. My stepdad. really sucks.
I used to bite my tongue and hold my breath, scared to rock the boat and make a mess. So I said quietly, agreed politely. I guess that I forgot I had a choice. I let you push me past the breaking point. I stood for nothing, so I fell for everything. Held me down, but I got up. Already brushing off the dust. You hear my voice, you hear that sound. Like thunder gonna shake the ground. You held me down, but I got up. Get ready, 'cause I've had enough. I see it all, I see it now. I got the eye of the tiger, dancing through the fire. 'Cause I am a champion, and you're gonna
Give me your
Now I'm floating like a butterfly, stinging like a bee. I earned my stripes. I went from zero to my own hero. You held me down, but I got up. Already brushing off the dust. You hear my voice, you hear that sound. Like thunder gonna shake the ground. You held me down, but I got up. Get ready, 'cause I've had enough. I see it all, I see it now. I got the
eye of the tiger.
dancing through the fire. 'Cause I am a champion, and you're gonna hear me roar.
God damn, I love this song.
I got the eye of the tiger, dancing through the fire. 'Cause I am a champion, and you're gonna hear me roar louder than a lion. 'Cause I am a champion, and you're gonna hear me
Jimmy, she's just too bad she had to go nutty. Got it hooked on heroin. Man, I'm impressed. Yesterday I was depressed. I told you I'd come back stronger than ever. How many trades did I take today on this challenge? My first day out, not too good. Today I took 1, 2, 3, 4. And I missed a lot of trades. This was a good double bottom right here. When we had that engulfing candle and that tweezer bottom, that's when I jumped in. Oh, I'm your new buddy. Oh, cool. Oh, yeah. Well, that's good, Jason. I'm glad to keep you entertained on the road. Just be careful driving. If you get excited over my music, please pull over. I love truck drivers. That'd be a good job. If I could trust other drivers, that'd be a great job for me. But I get lost too easy. That would be a hard job for me. I remember I drove to Michigan. Go through Chicago. And then on the way back, I got real stoned and I couldn't figure out how in the hell to get back home. I drove this highway 50 miles out of the way. I got back on the highway, but I was 50 miles north of it. I had to go 100 miles to get back on track. And I still was lost. This lady says America sucks. She hates living here. It's all right. I'll make it better for you. Do you want me to pay your rent? You want me to buy you a car? Socialism's a great place. I love socialism. Dang, the video keeps going. Yep. Oh, man, I can't have any more coffee, so I'm going to go grab me a term. It's now power hour. It is now power hour. And they call it power lunch. How dare you? That's stupid. And this guy. A couple weeks ago, we were doomed. Last week, we were doomed. Was it you, punk, that said $200 barrel oil? Huh?
The best sector, Nvidia and Apple and Microsoft.
Yeah, you're all excited
are all
now.
Nicely higher today, and so SpaceX ahead of its earnings report.
Just come out and say you were wrong. I don't think you have the balls to do it. And they got that frickin' Joshak on here again. This guy, by Uber. Uber's gonna go to 200, 150 and then 200 by Uber. I said, don't you know that people get raped in that car? Why would you want to buy Uber? I would doubt if he's pumping Uber again. Strategy, look at this. We got the 200, then we get the crossover. Breaks out past the 200. Boom, 3 white soldiers out of the gate. Boeing. Oh, this morning. Look at there. Look at there. There's the trade. There's the trade right there off the 20. 3 white soldiers on Boeing. So I never say chase 3 white soldiers. I always say wait for the pullback. And it goes right to the 20 and bounces off the 200. Perfect. Perfect. Just do me a favor tonight. Take time out. Pick 10 of your favorite stocks. Put them on a watch list. Then cry a river tomorrow because you're going to need a lake. And go through those 10 stocks every single 5 minutes. 10 minutes, unless you're in a trade. But keep, like I'm doing, I flip back and forth all day long. I don't stop. I'm looking for this. I'm looking for that. Definitely looking for this. And there's a triple bottom. 3 black crows. In and out of the trade. I don't know if I could tick that or not, but I would have thought about it for sure. That one. But I would have took that one. That's 100%. That setup right there is 100%. Copy it down. Copy it down. I'm telling you to copy it down. It pulled right back to that second crow. I mean, that second soldier. 3 white soldiers is a leading indicator that we could have a breakout, that it will consolidate and break out. 3 leading out of the bottom. 3 white soldiers. That's telling you something. That's telling you it's a very important signal. Don't chase it. Never chase it. Let it come back a little bit and then jump in it. But know in your heart that that's, the more I look at it, I don't know. Here, I would have definitely caught my attention on Boeing. I did look at it this morning. But at a beginner, 10 is plenty. 10 is plenty. You don't want no more than 10. My watch list, I probably have 40 or 50 on it. But I always keep going back to the same ones every single day. Why? Why? Because they have volume. They're talked about every single day on these crackpot shows. I don't even want to look at this call. I know it's going to be up nice. But I'm going to look at it anyway. That was the 7740s. Oh, God. Randy? That'd have been 350 more bucks on that trade. So learning how to trade this today, I made about 630 bucks, 650, just on the challenge. And I'm about in the video. SPX new high. I think new video would be good for long swing. But you got to buy it at the right place. like off the 200 SMA on the 2 minute. Maybe tomorrow. This is the poster that I had hanging up on my wall. My new girlfriend says, "Take that down. Take it down." And I had the one with her on the hay bale. "You can't have these on my wall. If I move in here, you got to take them down." I said, "Baby, you want me to put up Dr. Fauci?" See, this here was an ascending triangle breakout. So, okay, this here is right here. It's called an ascending triangle breakout. You got 1, 2 bits, a freebie, and a wick. If you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. This is called an ascending triangle. And you had all them opportunities today to take that trade down there at the bottom. Notice the crossovers are above the 200, keeping it bullish. I don't think anybody's going to explain this as well as I do when I get to know it. This is only day 2. And today I could have made at least 25 grand. So we're definitely going to be going all in on this. As we start to pull back, see, I'm not in no hurry. The day's over with. We're going to set an alert in 2 spots. Double bottom. Shit. Notice I ain't wearing my watch today. Yeah, what's up? I'm at work right now, man. Oh, I'm very busy right now. Do you trade stocks? You live in America? Oh. What's what? Why'd you hang up on me, brother? Man, what's going on, nigga? What'd you hang up for, man? You know, I think that'd be a good clone. Turmeric. Do, re, mi, fa, sol, la, ti, do. Fa, ti, so, mi. No. Wise men say you're a fool to love. Why can't I fall in love with you? I'm da-da-da. Do-do-do-do-do. Love. Take my hand, take my whole life too, and I can't stand falling in love with you. Oh, are we going to break out, or are we going to fake out? 2, 4, 6, 8, 10, 12, 14, 16, 18 minutes of consolidation. I mean, that's getting 16-minute candles. 16 candles is the limit. 8 is a scalp. 15 minutes. 2, 4, 6, 8, 10, 12. 1, 2, 3, 4, 5, 6, 7, 8. If you can get a 16-minute run in this strategy, scale some out. If you get 16 candles, get out. 30 minutes is a scalp. Anything beyond that is a day trade. Then you got to look at it as a day trade. Understand? Understand. Take my hand, take it whole life through, and I can't help falling in love with V. Whopper's ex-girlfriend. I got something to tease you about, V. Whopper. I hope you can take it. If you can't, let me know. I know it's probably loved the lady. I dated 3 lesbians at once. Back in the 70s, we had a lot of fun. We had disco. I'd go into a disco club. all them lesbians would show up, no men. I always walked out with something. I remember one time I was staring at a lesbian across the dance floor. And she started looking at me, and I started looking at her. And before I knew it, we were in there in the middle of the floor under the lights and the glass floor, just dancing away. (1977), the era of disco, and I had my driver's license. And 16-year-olds could go into bars, a couple bars back then. The guy said, "Do you mind if I dance with your chicks?" And what? I said, "Do you mind if I dance with your chick?" I said, "No." You ain't gonna do that. No, ranting on about Tesla. All of a sudden become very bullish. They got what they wanted. I'll never forgive them for it. Never.
When business slowed, Hank asked Copilot in Excel how to help bring back the $1 slice. It's power hour, so you got to be a little bit more careful, especially when you had such a great run like we've had. You know, you just don't want to take too much risk now. We'll probably have one more good day tomorrow. I'll be going a little bit bigger in my trades. I'm just doing three contracts at a time right now. One, until I get used to this strategy. If I can average 6 to 1,000 a day doing this, just playing, having fun, more fun than working at it. But I don't know. It's only the second day out, so. I used to trade the 50 and the 200 SMA for years. And I took what you would call a golden cross. Now I can trade them in any time frame. Swing, day trade, and scalp. But this, doing the 20 and the 10 keeps it tight, and the 200 keeps it at support. And I like that. The crossovers are easier to read. I like that. I can still use patterns. I like that. I can still use my crows. I can learn 2-minute candlesticks. In fact, let's see what that says. Yeah. Yeah, I think this is the one we're gonna. These are all bullish. Bullish? No, I can't. I don't trust this one. Yeah, this would be a good one. That's that candlestick I called out before, that bullish engulfing candle. Yeah, this would be a good one to watch. It's on the 2-minute. I think I've seen a lot of this. Then you want to pull up bearish, but these are bullish. Copy and paste that, YouTube. Put that in front of your computer.
I call these out a lot. Tweezer bottom, harmony, piercing. I don't know about, this one's a new one I'm going to learn. 3 white soldiers. You've got the 3 black crows should be on here because you'll reverse to 3 white soldiers. Got a hammer, I call that out. Morning star, evening star in red when it's up on top. And a bullish engulfing. Harmony. And then you could get dojis or something. There's always a candle in here. And you want it to keep above that tweezer, but this could show up with a doji or a hammer or some kind of bullish candlestick. And that would be an indicator that we might have a breakout. Long leg doji, inverted hammer. Spinning tops, shooting star, hammer, dojis, and engulfing. There's a lot of resources out there that can really make a difference. Here's that doji I was talking about, and a gap. That doji's a big one. Learn your dojis, learn your tweezer tops. Signals. I think the word I'm looking for is signals. And we're going to learn them on the 2-minute. 2 types of candlesticks: trend, reversals, and continuation. Called out Meta this morning. Fill them in. A tweezer bottom's a tweezer bottom, but look for bullish reversal single candle. Might get a doji, inverted hammer, many more signals. Spinning top, morning star. Wise men say. This is just like 2-minute time frame still gives me my inverse head and shoulders. We got more or less a fallen wedge or a megaphone. We got the double bottom after the right shoulder. Clean. Extra clean. Left shoulder, right shoulder, right shoulder. Same call I always make. If you like Meta, called this trade out earlier. If you like Meta, it should be on your top 10 watch list. Go to it every single day. Look for the snake. This morning we created what you call an inverse head and shoulders, which is a bullish pattern. So I'm set. I know that that's bullish, and I'm waiting for it to come back and hit that shoulder one more time. That second time is the secret ingredient to this recipe. Nobody will tell you that second shoulder is the key. If you find someone that tells you that, let me know. So you have all the patience in the world to wait for that. So you set you an alert. You established a head and shoulders. So set your alert maybe right in here off the yin yang. This is called a shoulder line, a neckline. This is a neckline. Watch this neckline. Okay, you're being a bitch. Pulls right back to that neckline, 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 neckline. Boom. Jim, I missed a trade. Don't worry about it, honey. Just wait for the pullback. There's that. Let's see what this does on the... Right to the 10. So you got your crossover. You know to take that trade right here. As it starts to arch up. That's the 10 and the 20. And it crossed over the 200. It's the same strategy I used when I first started with the 50 EMA or the 40. Might have been the 40 EMA. But that's look how clean that is. Then it respects the 9, so you're still in the trade. Then when it disrespects it, you decide to go ahead and get out of it. And then it comes up in triple tops, pulls back, so you know, another crossover. Oh, I thought that's a knife. Hold on. It's a what? SPX, boom. Two minute, 1 minute. Snake breakout, pullback, boom. Bounced off the 9, so I would have took that on the 1 minute. We did have a head and shoulders, right shoulder, so I'd have took that too if I'd have seen that. Left shoulder, head, right shoulder. 3 black crows. Tweezer bottom. Triple top. I'd be out of the trade right now. Yeah. I'd be gone. And I'd call it a day. Oh, I wouldn't look back. So all in all, yesterday, I just wasn't feeling good. I wasn't in the right mood. Today I come in here, second day of wearing these hollow socks, and I got more energy than I've ever had. The blood circulate, I can feel it. There's something different. And there's no ring marks on my legs, no waffle marks. I was getting waffle marks on my sock. My legs were swollen up. Now they're just, feels like I got a lot more energy. I've been sitting here for, a long time. 22 years. My legs aren't sore. Like, I don't know what the deal is. I better make sure I'm not in a trade, because that could be very deadly. Nope. Oh, I know what I was supposed to do today. I gotta go do that. I'll do that. I'm gonna be making that big money here soon, once I get this down. By 10 to 5 contracts at a time, maybe 20. I plan on making a lot of money next year. More than just my 100 grand a year. At least 2 to 3 million. $1 million, 2 million. If I make 100,000, 50,000 a day or a week, $10,000 a day. Ten times what my goal was to this year. Last year was 1,000, and I succeeded that. On average. And that was with the other on. It was busier. I understand where y'all coming from now. Saying it was too busy. I can see it. I mean, I can see it because I've sat here and saw it. But I am willing to bite the nail and say, I'm going to make this more easier and more simplified for the room. But to do that, you got to give me 10% of your profit. Now. I can't do that, Jim. I ain't gonna do it. Hello, my name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. I'm coming up with a new case study this week that I really like, and I think it's going to keep me in trades longer, and it really kind of cleans up my charts from a 1 minute to a 2 minute. So I've been studying all weekend on this strategy, and I'm going to put it to work tomorrow. So I'm going to go ahead and just kind of talk about a few things right here, show you how easy that we can take the strategy on. So on the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in and out. I think NVIDIA is going to be a good swing. Randy. We got to get the right price. Like my ding-a-ling went off. NVIDIA support. How many minutes? Oh gosh. Should I swing it? No. Triggered. Damn, a couple of them going off. SPY, SPX, triggered. Down 20 bucks from the last time I saw it. Where'd these come from? Oh, these were just lines that don't be in there. Burp it on up. Remove drawing. It's going to come down here and buy signal, and it's going to be too late. Remove drawing. Oh, that wasn't supposed to be there. Goodbye. Leave. Replace. We got a triple bottom right there, right where it is. But I ain't gonna do it. I ain't gonna do it. I'm done. It's like day and night from yesterday. Yeah. I'm gonna buy 7 more hollow socks. Now give me 14. Might buy, instead of 7, buy 14 of them. That'll give me 3 weeks of socks. I wash my clothes about every 2 weeks. Ladies, I wash my bed sheets once a month. And men too. You ever go into a guy's house and say, God, don't you ever clean? I can imagine. Ew. I ain't dating this guy. Look at the toilet. It's brown. Urine all over it. A shower. Ugh. How long you lived here and never washed a shower basin? Yippee-yi-yi. Positive mind, yes. You might get a good reaction on Intel. Depends on how much we bounced already. Randy, I want you to think positive tonight before you go to bed. And say, we're in a bull. Jim says we're in a bull market. I got to believe him.
200. Looks like 2308. 2208. Ding ding's going to go off. Okay. So really it wasn't too bad of a day today. It's one of them trades where I could have probably stayed in it again for a whole single day using that 20 SMA. And I haven't seen a moving average run like this before. I'm so happy I found this. 20 SMA, 20 SMA, 20 SMA, 20 SMA, 20 SMA, 20 SMA, 20 SMA. Could have kept me in the trade all day long. All day long. Yesterday, same situation. When it fails, we wait for it to hit the 200. When it fails, we wait for it to hit a chart pattern. When it fails, we look at different time frames. When it fails, we go back to our previous strategy, just to double check. When it wins is if it holds the 10 and the 20. When it loses, you'll have the crossover of the 10 down over the 20. It could loop back up. It could loop back up. So keep an eye on them candlesticks. I call this candlestick pattern 3 black crows. You got a hammer or a dragonfly, inverted hammer. Watch the candlesticks. Learn the 3 candlestick pattern. 3 bullish, bearish, and continuation bullish, bearish. You want to really learn the continuation patterns. On candlesticks. When the 20 comes close to the 200, it's a knife buy. When we had a day like today, you got to read the crossovers. And with that help, you got to use the candlesticks. That's so far what I've got out of it. It won't take me long to get this down. So I got to go and get some stuff. I'm just going to think about the pleasant things in life and
when you're having a day like I had yesterday, don't let it get to you like it does me. And if it does get to you, walk away from the computer. Clean house, find something to do. You're having a bad day with the wife, you're having a bad day with a girl, you're worried about bills, or you're worried about your mama, or so I went out and bought a door for the trailer out there for my mama. And she's, look, I mean, she's getting old and getting pretty raggedy down, so I got to be with her more. Now I'm going to let you all go. Give me a second.
Okay.
We'll catch y'all later. Yabba dabba doo. Remember what I said today.